no any threat about the production. Year to year we will improve. Presently I have told also 40 million ton we are doing, and it will go up to 54 million ton in 29-30. You ask about the environmental and forest. Very minimum environmental and forest issue, because it is old company. Already working is there. No fresh environment clearance or forest clearance, 1 or 2 patches. So in that way, forest and environment clearance is not a hurdle. And your third question was
regarding the company, how will they sort of manage the
threats of the fire or jharia. And for your information, the fire area previously it was 15.5, around 15.5 square kilometer fire area. Now it has come down to the 1/10, around 1.5 square kilometer, and we are very skilled manpower to deal this fire, and coal will be extracted without any hindrance.
So Coal India has set a target of 875 million tons. Now how much will it come from BCCL, and how will you manage the monsoon disruptions?
Monsoon, our target is around 46 million, another year another 47 million, and up to 29-30 it will be around 54 million ton. In that way our production share for Coal India will be 5%, but this 5% is cannot be compared directly, because maximum coal production of the Coal India is non-coking coal, and our coking coal, our company produces coking coal, and we are the only producer of the prime best quality of coking coal. In that way, this 5% is another, its importance is in another way. And right about the monsoon, we are various methods to deal with the dewatering processes, various pumping and drain cutting, and year to year we are improving to dealing with our monsoon.
The net profits have for the Q1 of FY26 saw a little bit of dip, 124 crore compared to around 750 in the last year. So how do you plan to sort of pump up the earnings in the coming quarter for the second quarter?
Actually, madam, the mining coal industry, 70% of the expenditure is of the fixed nature. Whether you produce or not produce, your expenditure is fixed. Only 30%, 25-30% is variable. So expenditure has happened because of the unprecedented monsoon and the heavy rains. Production could not take place. So that has dipped the profit in the H1. But now we are ready and gear up, because we had already achieved the 99% OB removal as per our target. And we are ready, and machineries are working, people are ready, and we will will reach to the target, and that will be compensated in the coming quarters.
All right.
You know, the reason why we've picked this one up is because of the subscription numbers. In the first 20 minutes as well, the retail portion got subscribed. So far, 3 times is the kind of total subscription that we're picking up on BCCL. Asta, with your expertise when it comes to the IPO market, how are you looking at a Bharat Coking Coal IPO, a 3-time subscription already on day 1? What is your advice to investors?
What I believe that the valuation is a key to look upon in this IPO, because they are bringing the IPO at a price to earning multiple of 8.6. So lower than 10 price to earning multiple, and it's a single digit price to earning multiple on which the IPO is coming. So definitely it creates a lot of interest, and especially when the ticket size is less than 50 rupees, because we all know that they are bringing the IPO at a 23 rupees at the higher end of the price band. So retail investors always get influenced by such kind of ticket sizes, because what they believe that this issue is not coming at a higher price, and in fact it is the main reason is because even price to earning multiple is also very low, only at 8.6. So I think this IPO is worth investing in, both from the listing gain as well as long-term perspective. And one thing which is main focus is that shareholders of Coal India can also apply in this IPO, because their subscription part is also there. So if shareholders have the shares of Coal India in their account by 2nd of January, then they are also eligible to apply in this IPO.
Exactly. So that's the view coming in from Asta. But there is a stock, Elcon Engineering. The stock is under selling pressure, weak numbers, guidance cut, and also a resignation coming in. Giving all the details is Anushi here. Anushi, what are the key details?
Right, Sharad, so if we look at Elicon's numbers, it's an overall weak set of numbers that we are seeing, and this is the lowest that we've seen since the last 6 quarters. Revenue up around 4%, but this is where the main story lies, is with the margins now that have contracted to 19.8% versus 27% last year. Even net profit saw about a 33% of a downtick. Do note that this is on back of flat revenue as well as increase in employee cost, as well as the change in product mix also impacted the margins that we are looking at. If you talk about segment wise performance, gear, which is the core revenue generator for the business, has also remained flat due to these delays in order inflows that happened in the first half of this financial year. Coming to the guidance part of it, now FY26 revenue, if we see, the guidance had been lowered by 5%, while adjusted EBITDA margins have been lowered by up to 2%. In terms of where the order book is, there's only that's like the positive part that we are looking at. Overall order book stood at 1,372 crore, which is 24% of an uptick, while order intake saw about a 7% growth. So this is the overall take that we have on Elecon Engineering. We'll await for more details and con call, which will happen at 4 p.m. today. So Sharad, yeah, that's the view coming for that.
Thank you very much, Anushi, for that. 4 p.m. Please be awake, post-market hours, that is. But Asta, I need your views also for this counter Elcon Engineering. Any value buy coming in, or you need to wait it out till the con call?
Definitely want to wait it out till the con call, because what we have seen is that there was a degrowth in their revenue, but in fact their EBIT margin was also lower, and that was due to the unfavorable product mix and the employee cost. So we really need to see how the company will going to set this kind of losses in the coming quarter. So definitely one should wait for the con call before making any kind of decision into this counter, especially on the buying side. Stay away from this counter as of now. This is what we are recommending.
Okay. So that's with Elecon Engineering as well, but completely out of time. Thank you, Asta. Thank you, Sharad. And with that, it's a wrap, and we'll take a quick break. We will be right back. Lots more lined up in lunchtime trades with Shreyansi Singh.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
3, 2, 1. 0, ignition, liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked. What's happening to my son?
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There be room for people in your space cabs?
Yeah, aspiration is 5 years down the line.
Really?
So we want to make space flight as easy as air flight.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
No Friday cheer on the last street. Nifty trades below 25,700 level. Sensex sheds more than 600 points. Realty, the top sectoral loser, followed by services and FMCG. PSU banks, defense remain resilient. Meanwhile, hopes of tier 2 company outperformance power IT. And it's Voda Idea that's in focus, giving up early gains as of now after the company gets relief from Department of Telecom on AGR dues, though a maximum of 124 crore rupees would be paid annually over 6 years. And IEX hovers close to day's low after Central Electricity Commission clarifies on market coupling order. As per the notification, July 23rd order will now be referred to as direction next tribunal hearing in the case on the 19th of January. And there's good news pouring in. AMFI data shows record high SIP inflows in the month of December, clocking mark 31,000 crore on a month-on-month basis, whereas demand for gold ETFs stays strong, hitting over 11,600 crore for the same period. And Supreme Court of the United States on global watch list now as the world awaits its decision on Trump's tariffs. The ruling may impact exporters and global trade dynamics significantly. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a power-packed news update from the world of commodities, markets, and lots more, all while you grab lunch. But the market is what we should be talking about right now, because you do have those levels that we've actually seen coming in for the markets. When it comes to the Nifty, of course, you do have a bunch of sectoral losers as well. Realty, service, FMCG, auto, exactly in that order. We do have Sharad who's standing by with a detailed analysis in terms of what exactly is happening. Sharad.
Well, yes, in the market pit, you see a lot of action is happening. But let's look at the Nifty stocks, intraday levels. It's at its lowest levels. Look at this. Look at it on the screen over here. This has actually come down below the 25,700 mark, and that's the concern coming in. For second straight day, there has been a pain. Let's look at Nifty Bank, what's happening there, and let's just pull up the chart of Nifty Bank and see the story remains the same. A slight recovery kind of a mode is happening, but still, it's near its day's lows levels as well. There are key factors to watch out for. Maybe there is a bounce happening from key levels, but we need to make and see more important levels to come in. And speaking of levels, Nifty has broken down its 50-day moving average levels as well. That's the first factor to watch out for. And also, interestingly, looking at the second factor, that is that Nifty Bank, that itself has broken its 20-day EMA levels as well. They are trying to recover, but it's not convincing right now. And largely no major action is happening in the option space as well. Now, largely the market breadth, you look at it, that has also come down over the last two trading sessions if you look at the mid cap and the small cap indices. And if you could show the important key triggers for the market being under pressure, this also includes the options data is suggesting that the answer is in a very small range bound. Let's look at the other points also which would be in focus. And of course, largely we see these are the indices where the action is there. But today there are two major activities happening, and this of course includes the Supreme Court ruling on Trump's tariff and the US jobs data as well. So today we might see range bound activity in the latter part of the trading session, but right now the sentiment is still very negative, and this is one of the major overhangs we are seeing in the market right now. Back to you, Shreyansi.
Well, absolutely, Sharad, and that's something that we're looking at right now. Let's quickly take a look at some of the losers as well, Sharad, other than whatever you mentioned in terms of the levels that you should be watching out for. Of course, the Nifty has broken that 50 DMA level. Nifty Bank has broken that 20 EMA level as well, and that's something that you're looking at. But let's also take a look at ICICI Bank. That's also down about 2% thereabout. NTPC, Bajaj Auto, and even Shriram Finance, Maruti Suzuki is something that you should be adding to that list of losers as well. And what's actually holding on quite well at this point in time is perhaps an Asian Paints, ONGC, HCL Tech, BEL, JSW Steel, Dr. Reddy's, Tech Mahindra. So those are some of your gainers at this point in time, of course. And you do have that sort of action that you've seen coming in. Of course, that's an Elecon Engineering that is down about 15% odd. We've seen those strong moves come in as far as that particular counter is concerned. Of course, the market is, you've seen that weak breath also come in the market for the second day. US-India trade is, of course, something that is in focus. Tariff concerns are at the very center of it. And that's something that we should be talking about right now. In fact, let's also decode the kind of timeline that we've seen coming in ahead of that Supreme Court ruling in the US. And Rishabh is standing by with all of those updates.
A major day in court for the Trump tariffs, and what we're seeing essentially is that this is a culmination of what's been taking place since March last year. What we're seeing is that this was the first time in May, rather, last year is when these tariffs were first challenged in court, in a lower court, which is the Court of International Trade. That was something that was, and the court had ruled that these tariffs are illegal. But since this was a lower court, this then moved to a higher court, which is the Federal Circuit Court of Appeals. They also said that these tariffs exceed presidential power. And what was also said that these tariffs will continue to still remain in place till the Supreme Court looks at it. Then in September, the Trump administration filed with the Supreme Court for expedited hearing. In November, there was more sort of skepticism that came in from the Supreme Court judges. And they said that and there was some skepticism about these tariffs. And now finally, we're here in January. The court is scheduled to rule on whether these tariffs will be upheld or not. There are two scenarios. If these Supreme Court rules, if the Supreme Court says that these tariffs are illegal, these tariffs could be struck down. importers will make a beeline in front of the US government to get these refunds to the levels of about $150 billion. Those are the rough calculations according to Reuters. That is the amount of tariffs that have been collected so far. So that is something we're looking at. If the Supreme Court upholds these tariffs, then the global tariff regime will continue to be in place. Markets may remain uncertain in response to that as well. And what we're seeing is that this presidential power that we're seeing being utilized and also sort of weaponizing trade, that could continue to be in place. So a lot of permutation and combinations, and we'll keep tracking this outcome.
Well, absolutely, Rishabh. Thank you so much for getting us that highlight in terms of the timeline and what that really looked like when it comes to this particular case, because the timing, in fact, is a very important thing here, because it's at a critical juncture that you have this judgment also coming in. And tariffs have been at the center of Trump 2.0. So this, of course, is going to be very important to watch out for. But speaking of important, let's also be talking to you about gold that is sparkling bright. And it's actually a weekly gain that is all set to eke out. Let's also talk about the tailwinds, the outlook as well for the year 2026. And we do have Biren Vakil, commodity consultant at Paradigm Commodity Advisors, joining us this afternoon. Thank you so much for joining us.
Yeah.
You know, the first... Right. So the first thing that I actually wanted to ask you is that, you know, you do have that continuation of trend that we've seen come in as far as gold is concerned. You did have that record year since 1979. And after that, there were a little bit of concern in the market in terms of whether or not gold's going to correct a little bit from here on. But it looks like this week has been quite strong. What do you make of it?
Currently, we are in the month of January, Roman god of Janus, which is showing duality. Index rebalancing of various banks, index fund is going on. So we may see little bit correction in current week or maybe next 8 to 10 days. But broadly speaking, fundamentals, sentiment and trade flows are clearly tilted towards upside. The recent Venezuela factor, Caribbean risk, is still not fully priced into gold. So I'm expecting somewhere around for $200 to $300 gain, means 48 or 5,000 is expecting range for the first quarter. And for second quarter, we may see further gains depending upon how scenario plan out. Basically, we are having so much white card open, geopolitical risk, monetary easing across the globe, China, USA, Europe. So there is too much money chasing too few goods, especially gold.
Absolutely. And Mr. Vakil, you know, what's actually interesting is that this week it's actually risen 3% thereabout. So looks like the fate is a little bit sealed. The envelope is a little bit sealed when it comes to this week. But what do you make of the next week then in terms of the tailwinds? Like you said, there's that geopolitical tensions bit. It, of course, is a safe haven asset if you're talking about bullion and even silver. But for now, let's talk about bullion in terms of the factors for next week and the kind of levels that you also have in mind.
In domestic term, gold level could be somewhere around 140, 145, maybe overstretched to 147. And for silver, it could be 255, 260. Silver is hyper volatile nowadays because of underlying OTC silver market at London is a little bit dysfunctional. There is severe disconnect between China, USA, and London OTC. So relatively, silver will be in outperforming related to gold, but still I'm seeing further upside. It is a kind of a bipolar gold market, means 5% correction and 10%, 8% advance.
All right, then. So that's the outlook coming in as far as silver is also concerned. But I also wanted to just sort of double down on that, try and understand what you're penciling in when it comes to January 8th to 14th, which is that key time that we have in terms of the index rebalancing, where we're penciling in that increased volatility as well, because Citi is estimating close to about $6.8 billion in terms of the outflows here. When you're talking about silver, which after a scorching rally, it's one of those big outflows that you're looking at in this particular annual rebalancing as well. So given that entire backdrop, what are you looking at for silver in terms of levels?
Basically, silver ETF is a very critical role here. And of late, China bullion market is seeing a huge build-up in exposure, physical exposure, investment inflows. European markets, retail investor as well, they are also accumulating silver. Basically, it's a fiat currency debasement trade. Means you want to hedge your currency risk, store of value risk. That's why across the globe, China, Middle East, central banks, US investors, all of these are allocating silver, their paper money or fiat money to hedge the portfolio value.
No, absolutely, and Mr. Vakil, what I lastly wanted to ask you was about copper, in fact, because you do have Goldman also coming out with a note where they've highlighted the importance of tariffs. When it comes to the year 2026, they're actually penciling in a little bit of a correction towards the end of 2026. We've seen a blistering rally when it comes to copper as well. So what are you penciling in, especially in terms of tariffs for copper?
I think it's a very tricky question for tariff related because there is so much uncertainty. But the AI story, basically semiconductors, electrification, AI economy. So fundamentals are in support of a strong and structural bull market because there is a significant deficit in raw materials. And demand is far outweighing supply. So I'm fairly bullish on copper especially for the second half of 26.
And thank you so much for joining us with that update there. So there you go. That's the entire verdict coming in when it comes to copper as well, when it comes to the entire picture, when it comes to gold, silver, and even the tariff uncertainty looming large when it comes to copper. That's something that Mr. Vakil also highlighted. But tell you what, that's something that we will be continuing after a very short break. And we'll also take you across to RK Vidge, who's going to be talking to us about what this looks like in terms of tariffs for textiles.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
3, 2, 1, 0, ignition, liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked, what is happening to my son.
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There'll be room for people in your space cabs?
Aspiration is 5 years down the line. So we want to make space flight as easy as air flight.
New Year. new power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
Welcome back. Thank you so much for staying tuned into Lunchtime Trades. It's time now to take a look at the tariff question, that is the tariff sword, in fact, that is looming over a bunch of industries with the US Supreme Court judgment as well in the spotlight. Now, back in November, you did have a little bit of negative commentary coming in when it comes to this one. But let's also explore what the roadmap really looks like and try and explore what the options could be when it comes to the textile industry as a whole. R.K. Vij, President, the Textile Association of India, is joining us this afternoon. Thank you so much for taking time out this afternoon. All right, and
Thank you, ma'am.
Thank you so much, sir. And the thing that I actually wanted to ask you is there's a bunch of things that you're looking at right now, because you're looking at the threat of loss of price competitiveness, supply chain disruptions as well. About those couple of factors, what are you making of this? Firstly, what's your first cut when it comes to the kind of expectations that you're penciling in?
Ma'am, this USA tariff, when they put about 50% on us and the rest of the countries about 25 to 30%, we were higher by 25 to 30%. So at that time, we were feeling that, it's very, yes, also in the last 3 months, we were actually the cotton industry, we were maximum out of $12 billion in a year, we were exporting about $10 billion of cotton garment and the rest $2 billion of that man-made. So our cotton industry and in garment industry in Tirupur and the home furnishing industry suffered very well, very high. So, but because whenever we export, that all raw material, designing, fabric remains in the pipeline for 3 to 4 months. So, over what to do? We have out of 25%, 12 to 15%, we reduced our margins, and 8 to 10%, the buyers also increased their prices. So ultimately, from last 3 months, with a loss and with cut down of production, about 20% to 30% production in Tirupur and other this home furnishing companies cut down the productions. So whatever the fabric and other things was in pipeline, so we were selling to USA, and meantime we were thinking if this first we were thinking that tariff may come down after 2, 3, 4 months to and compared to other country, but 20%. So, but meantime we were also thinking if USA export we will not do, then what are the other alternate? So we were developing the design and other things for the other countries. Now government is also very keen to do FTA with UK and EU, but it is still taking a time of, we hope that in next 3-4 months this FTA will be done. Of course, FTA with New Zealand, with Japan, with other countries has been done. So we are developing the sample for them. So, and now with the sudden immediately 500% of tariff, which we are listening. So now we are not bothered whether it will be 300%, 400%, 500%. Ultimately, we have to stand on our own feet. We have to fight on the market.
That's actually quite interesting, because you pointed out how you've been really navigating that Trump's 50% tariff wall, and now you're looking at a much higher figure. I understand that you're saying that you're exploring other options, alternative markets as well, but what you're penciling in terms of supply chain disruptions, is there an understanding that you have in terms of what you're going to precisely do going forward as well? Are you going to be sticking to the same approach that you've been following thus far?
So, ma'am, now with a 500% tariff, it is very difficult to supply to US. So already, of course, next 2-3 months, now we are zero hope that we will be supplying to USA. We will have to still do very hard work whatever we were thinking to do in next 3-4 months, so we have to do in 1.5 months, and till that time our production cut will be there, and we will face to a very bumpy road there. In textile always bumpy road are there, and we overcome all these things. But this, yes, 2-3 months will be very tough, and this zero export to USA will further hit to us, and we have no other option. We have no other option to export to the other market. Yes, other countries may also take the advantage that now India has a surplus garment and other things which they were exporting to USA, they will export to us, but we have no choice, and ultimately we have to overcome that. So by sitting idle, we'll do nothing. Of course, I think after 3-4 months, government will also help us, and our domestic market will also a good market. Yeah.
Mr. Vij, this is actually quite interesting because, it seems like you're highlighting that resilience is the only option here, and given the kind of tariffs that are quite exorbitant, that are going to be perhaps slapped when it comes to India, that seems to be the way to go. But I quickly wanted to also understand which are the other markets that you're quite bullish on, which are the other avenues that, you've been trying to navigate, all of that. So which is the other market that you're really placing your eye on right now?
In the world, the other maximum market is European countries, UK is there, and African countries are there. So these are the countries. Of course, New Zealand is there, but New Zealand, Japan, and these countries, their consumption is not very high, but ultimately we have to find out an alternate of $12 billion US market which is going to USA. We hope that with the support of this FTA, we will find out this 12 to 15 billion dollar market in Europe. Europe is a very big market. UK is very big market, and African country is a very big market. So we'll find out, but it will take 3 to 4 months.
And, Mr. Vij, that really does sound like a Herculean task as well when it comes to exploring newer markets, like you mentioned. It's quite a big figure that you're looking at in terms of what US contribution is as well. But I quickly, before we let you go, wanted to try and understand what is the pecking order that you have in terms of markets as well that you're looking at. You've outlined a bunch of those markets that you're looking at, that you're quite bullish about. The sense that I'm gathering is that Europe is the number one on that list. But what does the rest of the list also look like to you?
Ma'am, when we will not export to US, so what if we have to export, then ultimately we have to look after other markets. Whole world is there. Total, the textile trade is around $360 billion trade is there, and of course, yes, $70-80 billion of trade is in US is there, but rest of the market is there. We don't have any option is there. So either we have to sit idle or we have to explore that. Of course, now from the last 2-3 months, we have already started developing the design of European and UK market and other markets also. And we hope that we'll get that then, and sitting idle will not have. And ultimately, we have to achieve our $100 billion US target by 2031. Until that time, we will explore, because this GST correction, QCO correction, and other raw material which we'll be getting at the international prices, our home market will also grow, and we'll be competitive in the other market. That is the only choice is there, ma'am.
Well, absolutely. Limited choices and a lot of problems that you've highlighted, Mr. Vij, but it's a picture of resilience that you're actually highlighting. Thank you so much for joining us this afternoon. So lots of optimism actually coming in, at least when it comes to the Europe front, lots of problems, lots of headwinds that are there for the textile industry, very much so when it comes to the entire industry as a whole after navigating that 50% wall on tariffs and that really high figure coming in now as well with the US Supreme Court judgment also in focus. It remains to be seen whether or not this tariff order is going to be changing, if the regime is going to actually go through a shift. But quickly, let's also take a look at the markets, because we've seen quite some weakness coming in. No Friday cheer as far as the Lal Street is concerned. So that's realty that is on the back foot, down about 2% thereabout. Auto, service, FMCG, energy, those are your top sectoral losers. Exactly in that order, what's actually holding up quite well right now is PSU banks, up about 0.6%. Even IT on the back of that tier 2 hopes as well in terms of the outperformance. But tell you what, that in fact is all the time that we have on the show for now. Thank you so much for tuning in. Stay tuned.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
3, 2, 1, 0, ignition, liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So I was really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked, what is happening to my son.
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There'll be room for people in your space cabs?
Aspiration is 5 years down the line. So we want to make space flight as easy as air flight.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate. A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today, either on the back of price or volume action. But before that, let's see what's on the show today. Firstly, today we'll be speaking with two managements, not one, two management this time. Firstly, with NIBE, and this company has received an order worth nearly 293 crore rupees from the Ministry of Defence, and the stock is up nearly 22% in the last 1 month. So what's the way forward is something that we'll be getting to know from the management. The second is the most interesting company. The stock is up nearly 128% in the last 1 month. This is the biggest ever move that we have seen in this counter, and what lies ahead and what could be the reason behind this move is something that we'll try to know from Silver Cloud. When it comes to Crystal Integrated, that stock has hit an upper circuit of 20% in trade. This is the biggest ever intraday move that we have seen for this counter. And lastly, we'll be also talking about Krishna Defence. Now the stock is up nearly 12% in trade today, and it has touched its 7-month intraday high. Even the volumes are quite strong at nearly 14 times its 20-day average. So this is mostly what we'll be discussing on the show today. But when you look at the markets, it's the 5th consecutive day of fall that we're seeing 180 points downtick in the market. The Nifty is below its crucial level of 25,700, and it's the Nifty Bank Index which is one of the top loser, down nearly 400 points, and the Nifty IT Index that's managing to stay in green, up around 90 odd points, just around 90 odd points. Apart from that is the Nifty PSU Bank Index, which is also trading in green, up around 0.4% in trade. But Mahima, when it comes to the small cap segment, what's been buzzing here?
Right, so a couple of names, but very stock specific in the broader end of spectrum is what we are seeing, and that's reflected in the advance decline ratio as well. On the positive side, you have something like Crystal Integrated, which is locked in upper circuit, up 20 odd %. Then you have something like an Akash Infra, which is also doing fairly well. You have counters like Asian Energy, which is also up 6%, Yasho Industries, which is also up 5 odd %, something like a Silver Touch that Samit was mentioning, up by about 4 odd %, and something like a Good Luck India, Indofarm Equipments also seeing gains of about 3 odd %. But on the flip side, you have counters like Rajatan Global, which continues to be under pressure, down by about 8 odd %, Silja Tech down 7%, Kitex Garment, all these textile stocks taking a hit on the worry of US tariffs, down 7%. Phase 3, Allied Digital, Panacea Bio are some of the other counters that are seeing a downtake of around 6% each. But with that, let's also welcome in our guest for the day, CA Tapan Joshi, research analyst at www.catapan.in, joining us now. But before, Tapan, I come to you. Samit, wishing you a very happy birthday.
Thank you, Mahima.
Tapan, I'll come to you with regards to where the markets are concerned. First of all, of course, we're seeing the pressure, continuing. And largely on account of the worry of US tariff coming in, the decision going to come today. But overall, how are you viewing markets right now? What are the pockets that you're looking at?
Good afternoon, Mahima. Of course, the US tariff, all that, that is not in our hand at the end of the day. But whatever updates till now, which we have received in last 1 week, it's much more encouraging. I am quite optimistic this quarter result will be much better. But the problem is the FII selling is much more, and that is what is offsetting, at a higher levels. But I think from this quarter and next quarter, the result will be better, and that's why I'm much focusing on the domestic fund. I feel that banks, NBFC may do well. Even FMCG will start recovering from here. Automobiles data already been good. So I think now auto actually may come up. EMS sector, which has fallen down a lot from the top, I think that is also, maybe in 1 or 2 quarters it will start recovering. So focus on the domestic sector. I think export oriented sector still it will take time because the trade deal is not there. And I think even the global scenario is not so great.
Okay, all right.
Right, let's get in Varsha to understand what's been buzzing when it comes to Crystal Integrated. That counter has hit an upper circuit of 20%. Volumes are obviously quite strong in this counter, but what could have led to this 20% up move, Varsha?
Well, this is the biggest ever intraday move that we are seeing today, and if I were to talk about this company, they are an integrated facilities management service company which focuses on healthcare, education and public administration. Now onto the order book and visibility, the total order book stands at around 2,600 odd crore, which they need to complete it by almost 3 years, and so there seems to be a strong revenue visibility, number one. Number two, if you see the margin strategy going forward for this company, so they are shifting towards non-manpower intensive verticals, so this may lead to increase in margin. The margins may improve because of this. Now third is their emerging business. One is the wastewater and water management business, wherein the river cleaning projects with long tenures has been done. For the power and solar EPC, if you see, they are under evaluation into early stage discussion. For B2C task maker, if you see, the residential service platform with modular unbundled offerings are currently in progress, though they are currently in loss making. But overall, one is the margin improvement, the second is the good order book that the company has seen, and of course the growth that they are expecting from each of the vertical will actually drive the growth, overall the financial growth for this company. And hence overall, if you see, the good order book and the improvement in margin is what leading to the buzz in the stock.
Right, Tapan, Crystal Integrated, 20% uptick. Anything that you see interesting in this counter?
Yes, I see the valuation. Valuation is not so stretched as such. No, their business is quite diversified, and management now is focusing on margin upgrade. No, because they are controlling the cost. And if you see but the only thing is the outlook still not so great. What the management told, no, I'm not too much convinced about it. And the long term retail expansion plan is possible from here. See, the price hikes may be happening in most of their services, so that will actually help the margins overall. So the regional customer base is slowly gradually increasing. So, but at this level, I think valuation is on the company side. So I think if you get it around 5%, 10% down from here, I think one can stay. And even at this level, one can stay. But buy at 5-10% down, I think things may be better for 1 or 2 quarters from here.
All right, okay, so that's with regards to where Crystal Integrated stands. But moving on to our management conversation for the day, we're joined by Balakrishnan Swamy, who's the Chief Technical Officer and Head of Group Strategy at NIBE Group, joining us now. Balakrishnan, thank you so much for taking out the time. Mahima this side. My first question to you is with regards to the recent order win that you've had from the Ministry of Defence, and this is for manufacturing ground equipment of Universal Rocket Launcher System. This is of 293 crores, and I believe that the timeline for the execution of this is around 12 months. My first question to you is a two-part question. Firstly, you've done around 150 odd crores in the first half of FY26. Last year, you had already achieved, a top line of around 500 odd crores. What is the visibility looking like in second quarter? Do you think you'll be able to cross that 500 crore mark going forward, or will it be lower than that? And then give us more details with regards to this order win that has come in, because that's a significant one for you.
Yeah, sure. Thank you so much, Mahima, for this opportunity. To answer your couple of the questions that you mentioned, if I talk on the business outlook specifically, at NIBE Group, our outlook is driven within responsibility as much as an opportunity. We are scaling capabilities, not only for one services, but to support the Indian Army, Navy, and Air Force. Every investment and program we undertake is aligned with the long-term national defense preparedness and indigenized objectives, I would say. And coming to the specific order that we just recently won with the Indian Army on our Suryastra Universal Rocket Launcher System, it's a multi-caliber rocket launcher system which is capable of launching multiple rockets up to a range of 300 kilometers with precision. This is a strategically very important program. Probably, we should not view this as a merely one commercial order, but we at NIBE are looking this as a responsibility towards strengthening India's operational readiness. And to come to your figures, I'm very confident we will be very positive this year as well.
Right, sir. I do understand that you're looking to strengthen India's position. But if you look at your financials, revenue is down nearly 36% in the first half. Any targets that you could share for the full financial year, that is FY26 firstly, and for FY27 as well, on the revenue front and on the profit front?
See, on the revenue and on the profit, as of now, I can confidently say that we are definitely going to surpass what we did last year. And it is going to be on a very positive note. This is aligned, and I'm able to say this with the confidence, is with the strong order book that we have. See, our order book currently provides a very strong execution visibility. So I think we're very confident that we're going to surpass what we've done in the previous financial years.
What is your order book positioning right now and the execution time period?
Right now, if you see, as I mentioned, it has a strong execution visibility. Our focus as NIBE is morely disciplined on the on-time delivery, catering to the specification and execution as per the quality standards of our armed services. Beyond current execution, I would say our pipeline also reflects growing requirements across the tri-services platform, including artillery systems,
Right, sir.
launcher
Right.
assemblies, ammunition solutions.
Right, sir. I get that. But if you could just share some number on the order book, what is your current order book and what is the execution time period for the same?
See, if you see right now, currently what recently won with the Indian Army, it's around 300 crore odd number. The execution for is around 12 months. Similarly, we have orders, which is, I would say, more than 600 to 700 crore with an order position of execution around 12 months, 12 to 18 months, I would say.
Right. Balakrishnan, overall also, did a fundraise of around 250 odd crores. Just want to understand as to how do you plan to deploy this? Is it going to be towards fulfilling your orders for capex, working capital requirement? How are you going to deploy that, and what is the timeline looking like?
Yes, so the major chunk of this would be going into our most important strategic initiative that we have taken as a group. We are coming up with a mega defense manufacturing complex in Shirdi in Maharashtra. What we are trying to do is we are creating a world-class facility that will support India's tri-service and worldwide market over the long-term requirements. So we have been coming up with a mega facility, and that complex will be including large caliber ammunitions we are going to manufacture over there, shells we are manufacturing. We are going to set up a facility for advanced manufacturing ammunitions, and we are setting up an integrated facility which is going to support missiles and launcher system. So all this is going to go into our initiative in which we are trying to create a long-term national assets. So most of the fundraising will be going to these initiatives.
All right, Balakrishnan, you did talk about capex. Can you give us a full year number, or let's say visibility from FY27 point of view as to what is the capex you're looking at, and whether any debt going forward will be raised for that in FY27?
Probably I'm not sure specifically if I'll be able to answer this, but then most of this will be going into our manufacturing facility that's coming up in Shirdi. It includes our land, building, and also on the advanced automated systems and the machines that we're going to set up over there.
Sir, thank you for joining us and giving us the way forward for NIBE. Moving on, before we move on to our next small cap stock. In fact, let's get in Tapan firstly. Let's get his view on the company. 700 crore is somewhat the order book is. They're confident of growing more than what they did in FY25 in this financial year, and their management is quite bullish on the growth prospect. But Tapan, how are you looking at this count at the current valuations? Is it a good buy?
No, the valuation looked little bit stretched, because again, the profitability is quite volatile. Of course, the order book is almost 1.5 times of the annual turnover. But you see that year on year and quarter on quarter sales is quite volatile. That is where the problem lies. Again, they have to work on the margins also, and the execution is the main important upon how they are going to do it, plus whether they are going to get new order book. At least I expect a defense, maybe at least 2 times, 3 times order book should be there. And so if you talk about valuation, of course, a higher side, there are much better defense stocks available, so I'll better switch to other stock rather than I'll give a avoid to this stock basically.
Okay, all right. So that's the view with regards to where NIBE is concerned. But moving on and taking a look at what the FNO space is indicating right now, Shad, clearly under pressure is what we're seeing, but what are the cues that you're picking up?
Interesting view on that, Mahima. Largely, we see that markets a second straight day of intense selling coming, and Sensex is actually below its 50-day EMA levels as well. And the overall setup also, if you look at it, that's where the correction has taken place. Let's just pull out the Sensex stocks, how they are functioning, and let's just see only Asian Paints in the proper green. It's almost up 2%. Nothing much convincing to the screen, but yes, Reliance is back in the green. That's something to take from. But HDFC Bank, Axis Bank, all the large players are in the red. ICICI Bank, that was the last stock which was holding the fort for the last 5 days of carnage, but now it's down 2% and concerns are coming in the counters. Also, BankX, let's see what's happening there. Largely the structure remains same. It's very weak, and that has also come down with its 20-day EMA levels as well. So now the new support levels will be different for both BankX and Sensex. Let's see stock specific moves, what's happening here, and let's pull out the long build up. Nalco and LIC Housing Finance come into this picture, and short covering candidates, these include your Siemens and Asian Paints. Apart from that, the long unwinding names, let's pull out those stocks, which are they? Inox Wind and Glenmark Pharma. So a lot of stocks are moving around. Let's just pull up the short build up. IEX, that's down 7% in the trade. And Hitachi Energy from yesterday's selling, today also the selling has intensified. Stock is down 6%. The stock specific move here, nothing much there on the indexes. Some bearish sentiment is definitely developing.
Right, bearish sentiment is something that is developing, Mahima. And yes, as Sharad was mentioning, that we have been falling in second straight day of intense selling. But one stock that has been outperforming despite the market fall is Silver Touch Technologies. That stock is up nearly 128% in the last 1 month. So to understand what does the company actually do and what's the way forward for Silver Touch, let's speak to Minesh Doshi, the director of Silver Touch Technologies. Firstly, sir, a great rally that we have seen in the counter in the last 1 month. If you could take us through what does the company actually do and what's the way forward from here on?
Yeah, thank you, Somit, for having me on the show. So Silver Touch is classified as IT services company, right? And majority of our services is around AI, automation, cloud, security, and digital transformation. And our major customer base is in the government, enterprise, and we serve a lot of markets in North America, UK, and across the world.
Okay, Mr. Doshi, hi. Mahima also joining in. With regards to the recent news where you were selected as the digital transformation partner for the Indian Navy, and this is for the initiative of IPA DSV2. Just want to understand, first of all, as to what does this mean for the company? What is, this collaboration mean for you? How is it going to impact your overall financials in terms of top line as well as bottom line?
Yeah, so this selection under the Indian Navy's initiative for iPads V2 is a very strong validation of our technological capability, our execution track record in delivering mission critical and secure digital platforms. And this is one of the most sensitive defense environments in the country where we'll be delivering the digital transformation solution. See, our strength lies in end-to-end delivery capability for complex and secure enterprises solution. And our experience in handling very large-scale government and PSU projects and enterprises. This position us as very reliable partner and the choice partner for various IT programs of very national importance of India.
Right. But post winning this order, is there scope for winning more such defense orders for the company, be it from Navy or from the Army side?
Yeah, so basically, we are working on few projects on the Joint Indian Army, so Army, Defense, and the Navy side. So these are some of the projects, but there are many other projects of national importance we are delivering, like disability platforms for the Indian government, National Medical Council, what we have delivered, for the medical programs of Government of India. And we have been delivering a lot of end-to-end security solution for airports. So there are many such important projects, which Silver Touch has delivered at the scale.
Right. Also, if you could just take us through what is the current order book of Silver Touch and how much can it grow, say, over the next 1 year?
So current company's order book stands at 635 crores. And this provides, strong visibility over the coming years. It's notable to mention that, sustainable growth is year on year is like 27% CAGR, what we have achieved. And out of this order book, 70% is from the digital transformation, automation, data, and AI. So this shows, very strong tech-driven solution deliveries from Silver Touch.
Mr. Doshi, with the amount of order book that you've mentioned, we wanted to understand as to what the execution period is looking like, how much of a revenue growth will come in for the next few years perspective. And secondly, you've done around 150 crores roughly in the first half. What is the guidance looking like for the full year FY26? Because even your margins have improved significantly. So how sustainable are those as well?
Yeah, so if you see on the revenue front, the consolidated revenue has demonstrated very strong acceleration, and we have delivered almost 27% CAGR in last 3 years. And if you look at the management guidance and H1 of the financial year 26, this trend indicate that sustainable double-digit growth, will be able to deliver. And this is basically supported by the strong order pipeline, what we have seen. On the EBITDA growth, which is most important for us, and we are all working towards improving the EBITDA. The EBITDA growth is very impressive, and we have achieved 47% CAGR over the last 3 years. So if you look ahead, we expect to continue the year-on-year EBITDA growth, with the margin of like 16 to 18% in coming years. And overall, if you see, the company is, very well positioned with the order book, and we want to capitalize the future growth with the AI, automation, and digital transformation services.
And lastly, sir, just wanted to understand any plans on the AI front, given the fact that AI is one of the hottest topics when it comes to the IT sector.
So yeah, we have set up a subsidiary, which is working on AI solutions in the pharmaceutical segment, And this applies basically domain-trained AI models, to address one of the most critical risk areas in pharma manufacturing, which is regulatory and compliance, So this platform is advanced NLP and machine learning models, which are trained on GMP regulations, FDA regulations, and historical audit observations, So this solution, which is AI-driven batch record review, SOP compliance check, and this reduces, a lot of manual efforts in the pharmaceutical manufacturing processes. And this solution lowers the risk of FDA warning letters and batch rejections, to pharma industry. On top of this, we also built our own agentic AI platform and intelligent document processing platforms. So this is already making waves in government and enterprise customers for AI-led transformation projects by Silvertouch.
Okay, all right. Mr. Doshi, thank you so much for giving us those insights, and all the best for the second half. But Tapan, quickly, your view on Silvertouch, because Samit was just mentioning 126% in the past 1 month. I mean, in these kind of markets, such moves are very rare to see, right? What's your view?
Yes, very rare, Mahima. But sorry, I was not able to hear the management because it was not audible to me. But if I see here, the stock has gone up a lot. Again, the valuation is too stretched. The business is quite exciting. They have a Navy orders. Again, the digital transformation, automation is there. Robust pipeline is there. Again, if you see e-government enterprise vertical traction is also good from here. So defense win is actually exciting the market much more. But looking at the valuation, this is where one has to be careful. Yes, if you are holding the stock, please hold it with a tight stop loss because it may go down anytime. But at this level, don't enter. Wait it to get corrected. The stock is exciting. Even the orders are exciting, but I think valuation is too stretched.
Thank you, Tapan. Thank you for joining us and giving us your perspectives on the stocks that were discussed. Two key managements that were discussed on the show today, NIB and Silvertouch. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
Ignition. Liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked. What's happening to my son?
What do your parents do?
In fact, I told them after resigning the job.
do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There be room for people in your space caps?
Yeah, aspiration is 5 years down the
Really?
line. So we want to make like space flight as easy as air flight.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. New Year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The nerve center of the maximum city, the BMC. A contest that will shape Mumbai's next decade. Its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This
Hello and welcome. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me is Mahima Vachhajani. And over the next half an hour or so, we'll try and solve all your stock related queries. So do start sending them on the number that will start flashing on the top of your screen. That will be the WhatsApp number. You can also call us and talk to us directly for your stock related queries. The number will be flashed on the top as well, and that's visible right now. But you know, it's been a down and out session, and before we get to all your stock related queries as well, it's very important to have a check of the markets, because largely a day which has been consistently under pressure. And while we did see a small pullback from those levels about a couple of 20 minutes ago, we're still down, and yet again on the day's low now, comfortably actually below the 25,700 levels. Not comfortably, I mean we are at 25,689, but hopefully we'll be able to recover some of those levels, close above the 25,700 in the morning. We did start with hopefully maintaining 25,900 levels. That got thrown out the window very quickly. And since then, under pressure. When you look at the heat map for the Nifty 50, it'll show you the stocks data under pressure in today's trading session. Largely a day which has been dominated essentially in terms of the stocks also that are visible on your screen. NTPC has been one of the key ones that's been negative, but overall, roughly about 36 shares out of 50 are comfortably in the red right now. In terms of the gainers, largely we have seen the pharma pack being very positive, so DRL is up. Asian Paints actually has taken in the strength for today, while Eternal was the top gainer in terms of the Nifty 50 at the start of the Ask Profit, the morning edition. That's also now still in the red points, still in the green by 0.78%. Let's quickly look at the sectoral heat map as well for the Nifty because you do see consumption as a theme doing decently well. Defense also wasn't focused, but largely IT, oil and gas and PSU banks that are doing well. Realty, FMCG now under pressure, financial services and private banks. Those are the top 4 losers in terms of sectors. But Mahima, in terms of the broader market performance, how is the market shaping up?
Not looking nice at all, and that's what is reflected in the advanced decline ratio as well. Let's try to pull that up because both the mid cap 150 and the small cap 250 clearly under pressure. The mid cap 150 still at least in line with where the benchmarks are, down by about 0.7 odd %, but the small cap 250 has taken the hit and is down by about 1.4%. Today in the morning edition of Ask Profit also we discussed the same thing, that anybody who's gone ahead and invested in the small cap space is probably crying out loud since the start of 2025, and that's the case this year as well, at least till date, is what we're seeing. But quickly, if you can try to pull the BSE 500 up and see as to what are the counters that are buzzing, very stock specific day. If you can call it that, you have counters like Nalco, Siemens, Hindustan Zinc, Ashok Leyland, some counters in the green, anywhere in that 2 to 3% of range of gains. But on the flip side, you have IEX, which has taken a hit completely. We were just discussing as to how the order, from CERC, which has come out, has proven to be positive, but probably the postponement is something that people are not liking with regards to where the order stands, down 7%. Tejas Networks, Hitachi Energy, Godrej Properties, Balaji Amine seeing profit booking, V-Mart, all of these counters down in the range of 3 to 5%. But with that, let's also welcome in our guest for the day, Ruchit Jain, Vice President Equity Technical Research at Motilal Oswal, and Samir Dalal, Natwarlal & Sons stockbrokers, joining us now. Ruchit, before I go on to the first query, your quick take on how you're seeing the levels for the Nifty 50 as well as the Bank Nifty right now, and what should one do with regards to where the strategy is concerned?
Yeah, hi, very good afternoon. Well, what we have seen in last couple of days, certainly that usually such negative market breadth is not seen when markets are showing some pullback in an uptrend. So we believe that this is a change of a short-term trend that we have seen from positive to corrective phase. So in the near term, we think that markets would continue to trade under pressure. Immediate support for the Nifty is placed around 25,600, which is the retracements of the recent up move. But on any pullback move, because the important 50 DEMA has been breached, if you look at last 2.5, 3 months when the entire market was into a consolidation phase with a positive bias, every decline towards 50 DEMA were getting bought into. Now, yesterday we did see breakdown below that 50 DEMA, and today the follow-up selling is also there. So I think 25,600 is next support level to watch out for. But any pullback move, I think markets will see selling pressure in the near term.
Got the view. Ruchutam, welcome to the show. Let's go across to our first call for today. It's coming in from Amchi, Mumbai, and Nishant has a stock query for us. Nishant, very good afternoon. Welcome to Ask Profit. What's your query?
Yeah, I want to know about Angel One. I'm holding 10 shares at 25.50. I want to know a long-term view. I'm also holding ICICI through ICICI, AMC, and Geo Finance in this.
So in the capital market space, you are holding these stocks, and your view on Angel One. Got that, Nishant? Since he's asking for a long-term outlook, Samir, let me come to you. Firstly, very good afternoon and welcome to the show. Should Nishant continue to hold Angel One? He's bought it at 25.50. What would you recommend?
So good afternoon and thank you for having me on the show. So my personal view on all these stocks which deal with capital markets and especially have a lot of exposure to turnover, daily turnover like Angel has, is an avoid. I'll tell you why. Because we feel that today we are having exceptionally high turnover on the exchanges, especially in the F&O segment in the option side, and that is leading to profitability being quite strong. But if for some reason the volatility reduces and the turnover goes down because people are not able to make as much money, then the profitability also declines. So you're trading at high valuations in a bullish market, which is dangerous. For me, if he has to stay invested, the two stocks you could probably continue to stay invested in are ICICI Pru AMC and Jio. The mutual fund space is extremely attractive from a 5-year view. I would say buy any of them. In the larger boys, you could probably look at HDFC, you could look at Nippon, you could look at ICICI, all three excellent. And Jio Finance, well, you can hold on to it because it's a bet you're taking on Mr. Ambani that he'll be able to drive the business. It's still very early days. The whole value of the business at the moment is coming from his investment in Reliance. If you ask me, still got a long way to go to justify the valuation trades there.
Okay, all right. So that's with regards to where some of the names are concerned. But we've got our next caller. Geeta is calling us from Bengaluru. Geeta, hi. A very good afternoon to you. How can we help you today?
Hi, ma'am. Very good afternoon. Thank you for taking my query.
My
query is regarding Radico Ketan, ma'am. I have 18 shares at 2735. I'm in profit with 4583 rupees.
Okay.
So I want to know what is the short term and I am a long term investor, but the stock is forming lower bottoms and lower tops. So what shall I do?
Right. Okay. Geeta, got your question, and since you've observed the charts very well, I'll take this up with Ruchit. Ruchit, is her observation correct? First of all, is something that she wants to know, and secondly, do you think Radico Khaitan is a good hold from a short-term point of view?
Well, it seems that the stock has entered into some short-term corrective phase. If you look at a bit longer-term charts, then since the month of March, on the monthly basis, I think this is the first month where we have seen no such negative candle. 9% down from the start of the month. So on the daily charts, also the important support which were there, the short-term support that has been breached. The next level which comes for the short-term would be around its 200 EMA, which is at 2860, 2870. So the short-term trend looks a bit corrective. We could see levels around 2860, 2870.
Got the view, Ruchit. But the next query that's coming on WhatsApp now, and Nilesh Mehta is asking this question on Max Healthcare. He's holding 500 shares at almost 1115 rupees per share, and he's asking if he can add new at the current price. Samir, it's not a cheap stock by any means or imagination or otherwise. And firstly, your view if he should add more right now, and also his current price at 1115. What would you recommend Nilesh to do?
Look, from the long-term perspective, the healthcare space is something that one in India needs to focus on because the opportunity to grow is tremendous. There are a few of these large players who are scaling up quite nicely. Apollo, Max, there are a couple other large players, HCG and things like that, who are scaling up, getting new hospitals. Now, once the occupation of the beds rises, obviously profitability will keep going up. But what you got to realize is, yes, you are paying top dollar for it. So let's assume 3 years from today, if the stocks continue to grow, but the valuation multiples were to correct a little bit, then your returns would be a little subpar. So would you add on more at this point? I say wait, since you've already bought it at the higher levels, you have some holding. If it comes closer to 900, maybe 850, 900, that would be a more opportune time to buy. Yes, even that point valuations are a little rich, but the downside of valuation from a 5-year perspective looks a little lower if you buy it closer to 900. So what you could probably get is a 15 to 18% CAGR over a 3-year period if you buy at that price.
Got the view, Samir. We have another caller now dialing from Jaipur, and Raj has a stock query for us. Raj, very good afternoon. Welcome to Ask Profit. What's your query?
Yeah, very good afternoon. I'm having an NMDC share, 800 shares at average price of 77.52.
Okay.
I'm currently sitting at marginal profit of 3%. I'm holding for this long-term perspective. So can you please guide us on the technical fundamental viewpoint? And also, today there was some 52 rupees hike in the iron ore.
Right.
But the stock is going down. So
Right.
I fail to understand why this is happening. So can you please clarify on this issue?
Sure, Raj, and thanks so much for the question. Sameer, on NMDC, what do you make of the counter? Raj has bought it at 77, holding 800 shares. And also, if you can give some perspective on the copper on the pricing mechanism that he's mentioned.
So, sometimes when the prices rise and the stock falls, it's buy the rumor, sell the fact. A lot of people in the who track it quite closely already knew the price hike was going to come, and before the hike actually comes, they accumulate the stock, and then when the news actually comes, they come and book their profit. So those kind of things happen. You shouldn't worry. Now, in the short term, given the fact that steel prices, commodity prices per se globally have remained strong, iron ore prices are holding firm and maybe marginally moving up. So profitability for these companies will remain strong. Volume growth for NMDC is not expected in the near term. It's more 2-year story kind of for volume growth to come in. But I feel at that point you might see price corrections. So for me, at this where we sit in the commodity cycle, you could probably hold on to a little bit more. But if it comes to maybe 88, 90, I think one should get out. These are not structurally long-term stories. These are very cyclical businesses. And when the cycle turns negative, these stocks can lose like 70, 80% of their price. So make sure to book your profit when you're getting it. These are not structurally long-term things which you can buy and hold and forget.
Okay, all right. So that's with regards to where NMDC stands. Next caller that we have is Veer, who's calling us from Delhi. Veer, hi. A very good afternoon to you. How can we help you today?
Yeah, I wanted to know about Nesco, a long-term view. I'm holding 20 shares of Nesco at 1270. It's about 6% of my portfolio.
6% of your portfolio. All right. Since it's long-term, I'll take this up with Sameer again. Sameer, your view with regards to where Nesco stands?
So, Nesco, I think more or less is fully priced. The 65-acre land parcel which they have in Goregaon, they've more or less developed. It's been rented out. The revenue streams are very good. Their cash flows are excellent. So, all of that is known. Now, the growth has to come from its new businesses, which they're trying to expand. And one of them is food businesses. It's still very early. They want to do this highway, rest areas at highways where they had initially won 3 projects. Now they've returned 2 and they're just going to be doing 1. So they're very small opportunities for them. Yes, there are new ventures which will take time. But for the near term, if you ask me, the stock is fully priced. There's very limited upside from the next 2-year perspective. Then we got to see how the other businesses develop and if they can be scaled up. They're very scalable. I'm not denying that fact. But we need to see that the management is able to execute and scale them up well. And I think that's going to take a while. So don't expect anything major in the short term.
The next question that we have is from Sai Kumar, who's writing us from Vizag, asking about Shakti pumps at the levels of 780. He's saying that since the past 3 weeks, the stock has been declining and wants a short to medium term view on this one. Ruchit, on the charts, how are you viewing it? Ruchit, Ruchit's frame seems to be frozen. But Sameer, any view on Shakti pumps?
From the short term, no. From the long term, I remain constructive. I think there is an opportunity for the entire pump space, the solar pumps that are going to continue to happen. The benefits that the government is providing to the end users, the farmers, for setting up these solar pumps will allow consumption to grow. Valuation's a little rich, but long-term positive, short-term very difficult to tell what's going to happen.
Got the view, Sameer. And Sameer, do you have a preference between either Shakti pumps or Oswal pumps by any discussion on that also?
So I haven't studied Oswal pumps. It's a new listing. I mean, I've seen the company, but I haven't got any major coverage on it, so I don't want to comment. But Shakti, we still think that's one of the leaders of the space and will do well.
Got the view. The next one's coming in from Afreen from Hyderabad, and she's asking a question on CG Power and if it's the right time to buy into this for the long term. Sameer?
Given the news that has come yesterday, we need to wait and see what eventually the developments come to. Does the Indian government open up Chinese companies to compete in India. Yeah, but what I told you yesterday when I was on your channel is also, this is just news at the moment. It's very unlikely the government is going to allow international companies to come and destroy Indian companies, because we are actually working on Vikasit Bharat, Make in India, localization of production. Of businesses. So it seems unlikely. If that doesn't come through, yes, CG Power long term is good. But if that does come through, I think the stock is going to struggle for the next maybe 2-3 years at this price. Valuations are also kind of rich. So wait a bit, wait for clarity, and then buy, but don't be in a rush to get in.
Okay, all right. The next question that we have is from Mohan, who's calling us from Mysuru. Mohan, hi. A very good afternoon to you. How can we help you today?
I bought Vatak by 10 shares at rate of 1,520. I just wanted to know long-term view whether can I add the shares for or what is the future prospects.
Okay, I'll take this up with Samir yet again. Samir, your view on Vatak Wabak?
I'm going to sound like a little broken record here. Unfortunately, again, great business. I think the water treatment and the opportunity that is there in India is exceptional. Not only water treatment, but sewage treatment. And, all of this, Vietech Babag is in the very right space doing all the things. We simply find valuations unfathomable. I cannot justify, as much as I am positive on the stock and the business and the way the management is running it. I just can't. Even after a 30% correction, 1,800 is down to 1,200. I'm still unable to justify valuations and give a buy recommendation. So if it comes closer to 800, it would come somewhere where we have comfort, where we think we can make money over a 3 to 5 year period. But till then, I would not be buying it.
Got the view, Samir. But the next question is coming on Jio Finance, and Kunal Mehta is holding 3,000 shares at 310 rupees per share, asking we should hold on or add more at the current price. Ruchir, on the charts, any view?
The stock has been consolidating in the range for a while. If you look at last 3-4 months, the stock has not participated along with the broader market up move. So seems that the short-term trend for the stock is still sideways. So I would suggest to hold on your existing positions, but would not recommend to average at current levels until that trend changes or we see any volume-based buying happening over there. So fresh buying should be avoided. Existing positions can be held on.
Okay, all right. That's the view coming in on Jio Finance. Next one is from Tom Verghese, who's asking about Paytm. He's bought 100 shares at the levels of 1367. Wants to know from a 12-month view, can he hold or exit? Ruchit, your view on the charts?
I believe you can continue to hold on. Overall, the trend for the stock has been positive with a high top, high bottom structure. In last couple of months, we have seen some consolidation, but this just seems to be a time-wise correction within a broader uptrend. So just because the broader markets are not doing well, we could see a continuation of this consolidation for a while, but no signs of trend reversal on the mid to long-term chart. So if it's a position from a next 1 year perspective, then I think we should continue to hold.
Got the view, but the next one's coming in on IEX, and this one's, of course, we've been talking about it quite a lot from the morning today. Largely regulatory meet, but still there's a lot of clarity that still that has to come in. Samir, while we await a lot of the regulatory information to come in, if the market coupling is not supposed to happen, or there is only directions and not order in that sense, do you think this could be a big re-rating trigger for IEX?
Obviously, it will be a re-rating trigger. But even if that order comes of coupling, I've actually discussed this a couple of times with you all also, that today about 7% of India's electricity volumes is traded on the exchange. That's very low. There are countries trading as high as 90%. Look, the reason it's low is because there are a lot of these PPAs in place, but at some point these PPAs are going to come to an end, and when they do, then they obviously either they extend the PPA at a higher price, or they come to the spot markets, which is the IEX and other exchanges. So we believe that over time, this 7% volume will definitely move to 15 to 20% volume. This is a 10-year story, right? Now, even if you lose a little bit of market share, which IEX has about 94% or 95% market share at the moment, goes down to say 70% or 65%, and the market volume doubles, the turnover and the profitability is going to grow exponentially because there's no further capital investment required. Simple case and example is look at how BSE and MCX have performed on the exchanges when turnover increased, right? it's going to be a similar story. So for me, whether the order comes or not, it's a buy. If the order comes, it's a trigger that will pull the stock market up. Pull the stock up immediately if it comes in their favor.
Got our next caller. Karthik is calling us from Chennai. Karthik, hi. A very good afternoon to you. I believe you have a question on Parag Milk Foods.
Yeah, my question is on Parag Milk. I purchased a stock at 293.5, 800 quantity. I just wanted to know for a short-term trend how it looks like.
Okay, Ruchit, your quick view on the charts for Parag Milk?
The stock has seen a correction from the highs of 370, but now it's trading quite close to its long-term support, which is 200 EMA. That moving average around 260, 265 range itself. So I think at current levels, you can continue to hold if you have existing positions. But next week, follow-up move would be very important. If the stock closes below that 260 mark, then that would be a breach of that 200 EMA support. So you can keep a stop loss somewhere below 260 on your existing positions.
Got the view. Next one coming from Delhi now, and Kaushal has a stock query for us. Kaushal, very good afternoon. Welcome to Ask Profit. What's your query?
No long-term view on Bombay Burma. I can hold it for 5 to 10 years. So I'm holding it at 1870, a long-term view.
Got it, Kaushal. And do you have any other holding company in your portfolio, or is this the only one?
No, I actually wanted to hold this. Yeah. Okay. Only this one.
Okay, only this one. Got it. Samir, Bombay Burma, any quick view? Is holding at 1870. Of course, the underlying Britannia shares does hold a lot of value in that sense. Your view?
Sorry, don't have this one. No.
Ruchit, on the charts, anything that you can offer Kaushal right now?
So broader trend does not seem to be that positive. Along with the markets, we're not seeing that kind of participation coming when the broader markets are doing well. And the stock is also trading below its crucial hurdles. So I think here the upside seems to be limited. We could see a down move towards 1700, 1720 kind of range.
Got the view, Ruchit. But viewers as well as Ruchit and Samir, it's time for the rapid fire round of this edition of Ask Profit, the afternoon edition. I request you to keep your answers on buy, sell and hold so that we can take as many queries in the next 3 minutes. The first question is coming in on Hyundai and CDSL. Is it the right time to enter either of those stocks? Samir, your view?
CDSL, yes. Hyundai, also yes, but wait till maybe 2100.
Got it. The next one that is coming in is on Suzlon. Is it the right time to enter? What would you suggest, Ruchit?
I would wait for some signs of reversal. On the low side, 42 to 44 would be the support range to watch out for.
Zydus is the other one, bought at 970, 30 shares was Amit holds. He's asking if he should continue to be invested in this one. Zydus Life, Samir?
Can continue to hold, yes. The pharma space will do well and Zydus will too.
Castrol is the other one, bought at 223. 100 shares is what Deepak holds. Should he continue to do that, Ruchit?
Can hold the existing positions, but not eligible to average more over here.
Got it. Next one is on Bosch Limited. What would you suggest, Samir?
Just a hold. Wouldn't recommend a buy at this price.
Kavita from Australia is holding roughly 3,000 shares of Z Entertainment at 135. Should she hold, sell or add more, Samir?
Ooh, tough one. I would say avoid adding more. On a bounce, get out. This company's had too many problems.
Got it. Hind Copper, Ruchit has been one of the stocks of the week, month and year. What would you recommend?
Can continue to hold on existing long positions from a mid to long term perspective.
The next one that's coming in is from Karthik from Chennai, and he's asking on Kim's, the hospitality company. Samir, we got your view on the hospital stocks, but on Kim's, any view?
No view on Kim's, sorry.
Ruchit, anything on the charts, if you can offer?
So trend is still negative, low top, low bottom structure is there. So overall trend does not seem to be positive. I think Apollo Hospitals could be a better alternative.
Got it. Well, the next one is coming in from Kirtana from Bengaluru, holding 15,000 shares of Biocon. What is your view, Samir?
Oh, hold on. You have a nice big lot. Hold on to it. Biocon will do well.
Solar Industries, what would you recommend? Ruchit, anything on the charts?
Short-term consolidation, but can hold on at current levels if any existing positions are there.
Infosys bought at 268 shares. He's not mentioned a buy price, but he's at a profit. Samir, should he take this profit and get out of the stock?
From a long-term perspective, yes, I think there are better opportunities. But if it's just part of small part of the portfolio holder.
Well, viewers, that's all the time that we have on this this edition of the Rapid Fire as well as Ask Profit. Sameer as well as Rucha, thanks so much for joining in and giving us your time here on and solving all those stock related queries. But a lot more action on the other side. India market close comes up next. Thanks so much for watching.
Ignition. Liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked, what's happening to my son.
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There be room for people in your space cabs?
Aspiration is 5 years down the line. So we want to make space flight as easy as air flight.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. New Year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us
as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Award.
Good afternoon and thanks so much for tuning in. You're watching India Market Close. My name is Alex Matthew and with me is Sharad Dubey as well as Hiral Dadia, and we'll take you through the last hour of trade. It's been a little bit of a painful trading week for the Indian equity markets. If you thought that the first trading week of the year was a good one with those last 3 sessions, well, this one has not been a pretty one. In fact, this is the reason we're trading at the low point of the day for the Nifty 50. In fact, if we can pull up the intraday chart for the Nifty 50, you will see exactly that. We're trading with cuts of about 0.9%. We've broken below that 25,700 mark. And the question is, how far do we go from this point? What is contributing to this? Well, most of the constituents of the Nifty 50 are trading in the red, but you have a few stocks that are contributing on the downside. In fact, ICICI Bank, it's been the one bank that has held steady through the trading week when other large banks have seen a little bit of pressure. Today is not that day. Maybe some profit taking, but it's contributing as much as close to 50 points on the downside. On the flip side, you have a few stocks that are gaining. Interestingly, Reliance Industries is not one of the culprits today, but let's take a look at the whole picture. Let's look at the heat map for the Nifty 50 and you will see a lot of red on the screen. In fact, just one line of green, and that was led by Asian Paints on the top. ONGC, in terms of the oil price increase that you've seen overnight, maybe getting a little bit of a pop on account of that. BEL, HCL Tech, and a few other IT companies. But really, it's a sea of red. Right at the bottom, you have Adani Enterprises, NTPC, Shriram Finance, Bajaj Auto, ICICI Bank. This is where the problem is. 2% or thereabouts for ICICI Bank. Let's look at the broader markets because that's where you're seeing the sharper gashes. The mid-cap index also trading very close to the low point of the day, down about 1%, but the small-cap index where you're seeing the real pain, it's down about 1.7% at the low point of the day. The sectoral indices are also going to showcase the same picture. The biggest pain is in realty. Right at the bottom out here, it's down about 2.7%. You have consumer durables and a few others, including FMCG, including rural, that are trading in the red. Just about 0.1% for the oil and gas space, and the Nifty IT is trading flat. The question is, what individual stocks may be bucking the trend or what's under pressure? Hiral, how does it look?
Thank you, Alex, for that. In fact, the cuts are deeper when you talk about broader markets, as you mentioned as well. You can just pull up the mid-cap and the small-cap index and see we are at the day's lowest levels on that front as well. 1.1% is the kind of cuts that you're seeing on mid-cap 150 and small-cap 250. The cuts are deeper at the day's lows, but 1.8% is the kind of cuts that you're seeing on that front as well. Very quickly, stocks that are losing: Elecon on the back of earnings. IEX has now corrected on the back of the news has come in that the hearing has been pushed to the 19th of January. Force Motors, Manappuram is also under pressure, and this is on the back of the reports indicating that RBI has frowned on control of multiple lenders, as per what sources are indicating. And there is a concern when it comes to Bain's deal that has been delayed when it comes to Manappuram Finance, and that's the reason why that stock has seen a crack. Thangamel Jewelers also trading under pressure. MTAR is holding strong in trade today. Gokuldas Exports is standing strong. Aarti Pharma, Nalco and Ujjivan Small Finance Bank are doing pretty well in trade. But I think it's time for the factors that we need to watch out for, Sharad.
Well, it's a very interesting day of trade, and of course post-market as also we'll be looking at a key triggers for this space as well. But the first one is of course the key levels to watch out for. Nifty has broken down its 50 DMA levels, and interestingly we see the selling pressure is continuing. It's near its day's low, as Alex had mentioned. Let's see the factors to watch, which would be very much important, and the key levels Of course, this is something which you talk about. Nifty Bank also, the 20-day EMA, that has also come down below it and it's not showing any signs of sustenance. Also, let's see the other key factors which should be there impacting the markets right now, and that includes that the trade positions, you should be keeping it on a light basis, especially for the next week. There's a weak breadth in the market for the second straight day. No major supports from small caps or mid caps. US-India trade deal or the tariff concerns are impacting the markets and also weighing down on the rupee. The FI shorts are at 91%. We might see these numbers go up also in the days and the data which will come in. Also, lastly, we see that the markets have discounted the record December SIP numbers which had come in. So no major support coming in from there, and the global risk-on sentiment has fizzled out. Today itself, you will be looking at how the European markets are faring, and they are coming with a very short positive range. The opening is coming in, but the US tariff ruling from the Supreme Court and the jobs data is something which the markets are looking at. The key levels, the support levels have come down for both Nifty and Nifty Bank. This is the range you are looking at for Nifty and Nifty Bank, 58,600 to 58,900. That's the levels we are looking at. Back to you, Alex.
Absolutely. All right. Thanks so much for getting us those details, Sharad. Neeraj Devan is joining us this afternoon. Neeraj, thanks so much for taking the time. Always a pleasure speaking with you. Broad-based pressure in the equity markets. Would you be out there shopping at this moment, or would you wait for the dust to settle? Would you wait, for example, for the earnings season to start for you to get conviction on some of these names?
Yeah, good afternoon. Yeah, since yesterday we've seen a major correction happening in the broader market. Large caps, small caps have corrected a lot in a couple of days. But I think still, because earnings season is going to start, I think better to wait and see how earnings pan out, because this quarter earnings are going to be make or break for a lot of sectors, a lot of these capital good, infrastructure and related sectors, because third and fourth quarter are very important for them. So when you've waited so far, I think better, if you're still sitting on cash, wait, let's see how the earnings pan out and then take a stock by stock call, because I think this year is going to be more of a bottom up approach. You'll have to identify stocks, invest, broader markets. Still, even after the correction, there are still pockets which may still be expensive. So better to have a bottom-up approach, look at this quarter numbers and then take a fresh call.
Okay, so wait and watch approach, a bottoms-up approach is what Neeraj Devan is indicating. But it's that time when we do a stock of the day, and I'm sure you'll be able to guess this right. Elecon Engineering, on the way the earnings have panned out, there has been a managerial change as well. Anushi brings us all the details of what's ailing the stock. Anushi, over to you. I mean, a 16% downtake. Is this something that is warranted?
Here are a lot of factors to be considered for the 16% of correction that we are seeing for Elecon Engineering today. And of course, this is on the back of the third quarter numbers that are in focus. If we just look at the revenue growth, it's about 4% of an uptick that we are seeing, which is one of the lowest since the last 6 quarters that we are looking at. In fact, there has been a sharp margin contraction of around 270 basis points as well. And this is with the change in product mix that has taken place, along with the flattest revenue growth which was accounted in their gear segment as well. Order intake, if we talk about that, that has seen about a 7% of an uptick to 701 crore this quarter, while overall open order book as on 31st December stood at 1,372 crore is what we are looking at. But it is also the overseas business which was impacted by these geopolitical uncertainties that we are looking at. So that is one other factor, apart from the main stay, that's gear division revenue, which remained majorly flat on account of there being some deferral in terms about softer order inflows in the first half of this financial year. Coming to the numbers, we talked about the 4% of growth, along with that margins, even net profit we see about a 33% of a downtick, but it is the guidance which is of focal point going forward, because if you look at the FY26 guidance, they've now revised it and see that this may be lower by 5% or so, while adjusted EBITDA margins may be lowered by up to 2% is what we are looking at. Even the order book is 1,302 crore. How this last quarter pans out is something that we should be watching out for. So overall, on the guidance side, it was a miss. Along with that, even in terms of the numbers, it was a miss that we are looking at. But analyst coverage on this, we are looking at 6 buy calls with 0 hold and sell calls. But the upside potential on this remains 70% or odd. So this is as per the overall brokerage consensus that we've taken out. So Elecon Engineering in focus on the back of this.
Okay, so that's with Elecon Engineering. Neeraj, How are you looking at Elecon Engineering? Thank you so much, in fact, Anushi, for that. But your view, a 16% correction today, what are fundamentals indicating?
Of course, the quarter numbers are not good, and there is definitely some concern on margin front and growth, as there's growth concern. But I think after the fall that we've seen in the stock, it's been falling earlier also. I think now it is coming to attractive valuations. So I think if you get some more fall from these levels closer to 400, I think fundamentally, we'll have to see how order book pans out, how margin, but purely on valuation front, I think around that level it will become, I think, a value play.
Joining us is Kunal Shah. He's a senior technical and derivative analyst at Mirae Asset Sharekhan. Very good afternoon to you, Kunal. Looking at the markets, the key support levels are being broken down for both Nifty and Nifty Bank. Any strategy for Friday today?
Good afternoon. Good afternoon to everyone. Firstly, I think not a good Friday for us, for the markets. Now on the Nifty, what we have been observing since the last 1 month, earlier Nifty on the weekly charts had formed a hanging man pattern, which is a bullish reversal pattern. And we were not able to break that low on the weekly chart. And that low was 25,890. Now we got a breakdown below that in today's trading session, plus this is the weekly close. So which gives you the confirmation of the pattern for Nifty on the downside is now open. I'm expecting a good decent side correction even from the current levels. Obviously, it will not be a one-way move since the last 5 trading sessions we have witnessed some good correction from the high levels. So utilize pullbacks as an exit opportunity. 25,800, 900 will now act as a very strong resistance on the upside. So any pullback towards these levels will be an exit. I am expecting positionally Nifty to go first target would be 25,300, which is the immediate support, and post that 24,800 on the downside. So now on the technical charts, the confirmation has come in, and we are looking for probably a good from say 3 to 4 or even 6 months perspective, or probably a bear market which has started here on the Nifty index. For the Bank Nifty as well, here I'm looking at more downside levels, but still needs confirmation. So Bank Nifty important support is 58,900. Again, once that is taken out on the downside, expecting a big correction to back in the Bank Nifty index as well. So 58,900 is what I'm eyeing for. If that is taken out, one can go aggressively short. Bank Nifty can come down towards the mark of 56,000 to 55,000 on the downside. So both the indices are looking weak. Nifty and Sensex has already given us a confirmation. Bank Nifty still needs some confirmation. A break below 58,900 will confirm the pattern on the downside.
Kunal, I can guess one of two things. Either you are looking at the market and you're so dejected that you're ready for the weekend based on your t-shirt, or you're looking for a little bit of green on the screen, and so you're contributing as much as you can. One of two things. But having said that, is there any index strategy that you can recommend in terms of options right now, or is there an option strategy that you can have in the event that your cash market investments, if you might have them, are taking a little bit of a knock?
I think firstly for the options front, I will wait for a pullback to come in. My strategy would be definitely to go for a bear put spread on the index, whether it's the Nifty or the Sensex, because both have given us a confirmation, but not at these levels, because already we have seen a good correction from the high levels. So pullback is there, which is pending for the markets. We'll have that pullback towards 25,800, 900 zone on the upside, and then probably we'll see the correction continuing. Over those levels, one can again go for the January expiry, that is the last monthly expiry. I would recommend there to go for a bear put spread, where one can buy a 25,800 put option and hedge it with a 25,300 put option. This is what I'm expecting for the Nifty index, downside to a 25,300 mark.
Okay, so that's with the Nifty, and if you're talking about what's happening in the markets. But one stock which has actually started to see buying interest after that rout is Meesho. We were just debating right now as to whatever we are saying with regards to Meesho, does it really make sense? But the question is that stock has come back to square one, was trading at its listing price after a sharp fall from its highs. While volumes have been spiking, volatility is high, losses are widening, but you have that interest that's come back today. Is it that investors are again looking at lower levels to enter? What is happening? Because fundamentally, the key question is what's wrong with Meesho. Let me bring in Mahima to analyze that for us, and then she'll tell you what's happening today as well. Mahima, over to you.
Right, Hiral. So as you rightly mentioned, it's probably sentimental. Yesterday we saw it at that 162 price point, and probably people entering again at the IPO price, and that's why we're seeing that uptick coming in. Plus, liquidity has always been the case for this particular counter because free float is very less. Of course, on 7th of January, the lock-in did open for 11 crore shares, around 2% of the total equity, and free float available is around 39 odd crores. Average daily traded volume since listing is at around 54 odd crore, and average daily delivery volume since listing was around 8.6 odd crore. In terms of, all of this suggests, of course, that volatility is largely caused by multiple intraday trades. Daily volatility movement was at that 7% between high-low prices on an average basis. So this is with regards to where the volume stands. The second cause of concern is extremely rich valuations, right? Because 3 year forward, if you'll take a look at the EV to EBITDA number, that's at 40 times, and that's beyond expensive in terms of where the valuations stand. With regards to losses, they have seen losses expand in FY25 from the 328 crore to around 3,942 crores. Of course, there was an exception item as well here, but barring that, also losses have been expanding. ROC is still a negative number, 15%, minus 15% in 2024 and minus 9% in 2025 with regards to where this number is concerned. Some other risks, of course, include the elevated execution risk that they have in terms of their business model, because they operate at very low price points, and competition from something like an Amazon, Bazaar or Shopsy is something that is always a concern and an overhang for a company like Meesho. Plus 77% of their mix is cash on delivery. So that's also something that would hamper their overall numbers. And lastly, reliance on fragmented logistics, because their reliance in terms of where Valmo stands is very high, and that could be one of the reasons that could hamper their overall business as well. So these are the concerns right now fundamentally that Meesho is facing, but we'll have to wait and watch out for as to how this new age platform fares going forward.
Thanks a lot, Mahima, for that. I want to get Neeraj on Meesho. Some selling pressures, of course, over, and now we're seeing some kind of a fresh buying, at least from the retail segment. Do you think good time to enter the stock, or still concerns are there, Neeraj?
I don't think so. I don't think it's a good time to enter the stock. One, it's an expensive stock. Let's see the quarterly number. Will come the first numbers after the listing, I think. And third thing is very low promoter holding in the stock. I think promoters hold only 16-17%. So I am not really looking at this stock right now because of these reasons. And maybe let's see the numbers. If something really interesting comes up there, one can still rethink the strategy.
Right. On that note, it is time now, gentlemen, both for you and for our viewers, to pay attention to what is heard on the street. My colleague, Somit Sarkar, on the day of his birthday, is here to tell you what you should watch out for. Samit has refused to wear a party hat, but at the very least, I'm going to try and make him smile. Yeah, thank you.
He always keeps smiling. I think
I'm always smiling. Just on air, I'm not smiling. There you go. See, you should smile.
That's true. That is true. So you can add a little cheer, Samit.
Yeah, a few stocks that dealers have highlighted. Firstly, it's Zydus Life. Now, the counter has been under pressure for the last couple of trading sessions. There are sell flows on the large HNI desk. What dealers are indicating is that there is a buzz of a large acquisition that the company could do. In fact, the acquisition size that has been that we are hearing on the street is that it could be around $2 billion US, and hence this selling pressure or this pressure is coming in when it comes to Zydus Life. When it comes to Federal Bank, there are some sell flows on the PMS desk is what dealers are indicating. For this counter, it was up in trade, but it has come down right now, and dealers are expecting that the third quarter numbers could be on the weaker side, and hence this sell flows coming in. For HCL Tech and Havells, HCL Tech will be reporting its numbers on Monday. There are buy flows on institutional desk. For Havells at the lower level, the buy flows continues. Both foreign and domestic institutions have been buying some quantities at lower levels, and dealers are expecting that the Q3 numbers for both these counters could be much better compared to what the street is anticipating. And when it comes to Paytm, multiple dealing rooms have suggested buy calls to their clients based on technical charts. So one should keep an eye out for Paytm. It's trading around 1300 rupees. And lastly, when it comes to Eternal, that stock is largely flat right now, must be trading in green, around up around 0.3, 0.4 odd % so far. The buzz on the street is that the numbers could be much better. In fact, the Blinkit losses could be much lower when it comes to Eternal compared to what the street is estimating, and hence there could be some buy flows that could go on when it comes to Eternal.
Okay, these are interesting names that we're looking out for. Let's just pull up Eternal, but before we let Somit go as well, I think in his style it should be enjoy must and party hard is what I've heard. Those were his lines, right?
No, it's enjoy must, party hard, take care.
Yeah.
You have to see.
And then there are some emojis as well.
There are some emojis as well, which we won't say on national television.
So yes, it's Friday, so enjoy must and party hard. And hopefully the party continues for the markets as well from Monday is what I would say. But Eternal was an interesting one that Somit just highlighted for us that we should be watching out for. Any views, Kunal, in terms of Eternal? But before we go to Eternal as well, your top picks at this hour, because that's what we've missed.
Yeah, I think, again, I'll have two stocks, one on the buy side, one on the sell side. Buy side, I'll go with Persistent. Again, the setup looks good in a weak market, and we have seen buying interest from the lower levels. So Persistent is a buy for me even at the current levels. Stop loss would be 6,200 and targets will be 6,600 to 6,750 on the upside. So Persistent is the first pick on the buy side. Second pick, I would go on the sell side over here, and that would be HDFC AMC. Again, the structure is getting weaker and weaker. The stock has already been trading below the 20 DMA, has given a breakdown on the technicals, and here the momentum is likely to see on the downside. So that's a sell for me with a stop loss of 2650, looking for targets of 2400 to 2330 on the downside.
All right. So that's the call. And let's also talk about Eternal because I don't think that we've gotten a view on that. What are the technical charts indicating to you, Kunal, at this moment?
See, I think at the current levels, we have already seen a good correction in Eternal from almost 350 towards the mark of 280. Now it has been consolidating at the lower levels. We have seen some buying interest coming at the lower levels. There has been volume-based buying. So from a short-term perspective, yes, the view remains bullish. 275, 276 acts as a very important support for the stock. The immediate hurdle on the upside is 298. And once that is taken out, then probably the stock can go towards 304, 305. The larger term view still remains sideways, but from a short-term perspective, one can go on the long side.
Okay. All right. You know, we were speaking with Parag Thakkar this morning, and he was saying again that he's not really somebody that likes this space very much. But if he were to choose something, it would be Eternal. Neeraj, on the fundamentals, do you concur, or do you think that it's still a little too expensive and it's burning cash as things stand? That's the nature of the business.
Yeah. It may be expensive, but the kind of growth that can come their way with the kind of capital they are investing right now, also in the quick commerce. I think it's an interesting play for an investor because it's corrected a lot from the highs. I think around 275, 270, it again becomes a buy as far as my analysis are concerned. So I think one should be looking at accumulating Eternal at these trends.
To accumulate Eternal, it's slid a little bit over the last 3 months, as you saw on that chart. We have to slip into a very quick break on India market close, but we'll be back on the other side to talk about a lot more, including the preview that you need to know for IT as well as Avenue Supermarts. The results are tomorrow. We'll be back on the other side also with a few BTST or STBT ideas. Stay tuned.
Ignition. Liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked, what's happening to my son.
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There'll be room for people in your space caps?
Yeah, aspiration is 5 years down the line. So we want to make space flight as easy as air flight.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Welcome back to India Market Close, and looking at the markets, just pull out the Nifty and the Nifty Bank chart and see if any kind of a recovery attempt is being made in the markets, but it's not convincing. Nifty is still down 200 points, and Nifty Bank also we see the story remains the same, but there is some action happening in the mid cap and the small cap space. Let's pull up the Nifty mid cap index as well as the Nifty small cap index. A slight recovery attempt is being made in both of these indices as well. Neeraj, I'd like to get you on this. Your view on the small cap and the mid cap space. There was some kind of a value buying and breadth was opening up over the last 1 week, but the last two sessions there has been some kind of a sell-up. Any kind of a value emerging in any of the counters or sectors in the small cap and the mid cap space where you're bullish on?
See, we should go with the sectors which have done well over the last couple of quarters. So financials is one. So if you're getting any opportunities, any correction in the financial space, BFCs, small banks, PSU banks, I think that is one space one should keep a watch for. Then other would be, depending on how the results pan out, infrastructure, capital good engineering space is one space where I think this quarter is very important. So after the correction, if you get some better results there, one can have a look at that sector also. Auto has done well, so auto will all follow in large cap, but auto ancillaries you'll get opportunities as far as mid and small is concerned. So auto ancillaries is another space where one should be looking at if there's a correction there, that we've seen right now.
Neeraj, on that note, thanks so much for taking the time. Pleasure speaking with you on NDTV Profit. Now, let's talk about a stock that has had quite the turbulent ride. If you can call it a roller coaster, well, that might just be an understatement because IEX, it spent a little bit of time even today in the green, and then after that it's broken. It's currently trading at the low point of the day, and there is quite a bit that is ongoing with regard to that appellate hearing and what the court has said, what the regulator has been doing in the meanwhile, because there is this definition change between order and direction by the regulator. The next hearing is set for January 19th. But let's get in Varsha, who's been tracking this entire case very closely, to tell you about the context, what has happened yesterday and today, and also to tell you what to look forward to on the 19th. Varsha?
Well, thank you so much for that. Clearly, if you see the stock is under pressure, this is on the back of court's critical comments on the market coupling case. Now, if you see, Aptel has scheduled the next hearing on January 19. The judge explicitly stated that the CERC is not bound by its own staff paper. Now, investors are reacting to the increased likelihood of strict regulations that could disrupt IES moat, that is market dominance. Now, court clarified, that the staff paper is merely a collection of ideas and suggestions and not a final legal directive. Now, why I'm saying this? Because IEX primary defense that the CERC's own staff paper didn't support market coupling was effectively neutralized by judge. Now, the court reaffirmed that the CERC has full legal right to frame and change regulations as they see fit. Now, but why the market is panicking and why the stock is down? If you see, with the legal defense for IEX appearing weak, the threat of market coupling remains and IEX may lose its market dominance. Now, this is the concerning point for investors. If coupling is implemented, then IEX massive liquidity advantage could be neutralized, and which will impact its margins. Now, what analyst at Nuvama is saying, let's see, they're saying that the stock could further face sharp correction as long as this regulatory uncertainty persists. So the bottom line is, still the case is not clear, and now the IEX defense is appearing to be weak, and hence you're seeing this pressure in the stock price.
Okay, so that's with regards to IEX. In fact, an interesting clarification also from IEX saying that, and this is specifically with regards to the stock movement, that this is on the back of the public information that has come in from the Aptel hearing, and there has been no order regarding the market coupling that has been passed by Aptel so far. The hearing has been now scheduled for the 19th of January, and the stock is trading at the day's lowest levels. Kunal, what would you say in terms of charts for this one?
I think absolute avoid at the current levels. I think there is no decisive move on either side. So this is one stock which I'll say avoid only if the stock closes above this mark of 151, 152 decisively and sustains above it. Then only the next leg of up move will start. Till that time, my view will remain avoid this stock.
Okay. All right. I want to ask about another group of stocks that's had a chop and churn kind of movement this week, and that is, Kunal, the metal pack, right? Because you're seeing a few counters that were pretty heavily beaten down yesterday that are making a little bit of a comeback, and a few that are still languishing. In fact, let's pull up the metal index in the constituents just to showcase what is moving in the green and what is not. Because I saw Nalco is doing particularly well. You have Hind Zinc and Vedanta also that are up and about. Kunal, what would you say about trading the metal pack?
I think metal as an index has already witnessed a good rally from the lower levels. The larger term trend still remains positive since the rally was very sharp. So within this entire larger term uptrend, we are witnessing an intermediate correction. The metal index, which is currently trading at 11,100, the next support is around the mark of 10,900 zone. So probably from these levels, more 200, 300 points is left. Again, this is where the 20 DMA for the metal index also lies. And probably from those levels, if we see any strong reversals, that would be a good entry point on the metal packs. So 10,900 is what I'll be watching out for. A support over there, a reversal from those levels. I'll be aggressively bullish on metals. The metal index can go toward 11,800, 12,000 on the upside.
Looking at ICICI Bank, Alex, we are discussing about the strength which they were showing this week itself, and this is the last stock which has actually given up, and it's given up significantly in the day's trade as well. It's down lowest levels is down 2%. But the street is having a divided opinion on the stock, and Vishy is here to give us that bull versus bear scenario. Vishy, what you are getting from the stock?
Right. So if you were to look at where ICICI Bank is standing at this point in time, of course, it's the second largest private bank in the system. And just looking at the bull versus bear scenario as far as the bank is concerned, the asset quality, that is going to be the big bull as far as ICICI Bank is concerned. It's got a lot of really good quality assets. They've consistently managed to cut down on the NPA. That's obviously a great positive sign. On the negative, however, is the single-digit growth in profit after tax during Q2. This is after multiple quarters of the bank seeing double-digit growth as far as the profit after tax is concerned. If you were to look at what the expectations from the management are, they're expecting the second half of this financial year to be much better than what the first half looked like. This is commentary from the management during the analyst con call that they do at the end of the quarter. Credit growth, however, in Q2 did remain soft. This is largely being led by a softer than expected uptick on the corporate loan scenario, which for other banks seems to be picking up quite a bit. Valuation wise, 12-month forward is about 2.5 times 5-year average, price to book. That's looking like a reasonably decent level for an ICICI bank. But the negative point here is that the CEO of the bank, his term is ending in October of 2026, and we don't know if his term is going to continue after this current 3-year tenure ends. They've not given any clarity on whether they're going out to the RBI and seeking more time for the CEO. Analysts are seeing a strong disbursement traction in Q3. This is being prompted, of course, by better than expected pickup on the retail front, primarily because of the GST rate cuts that have come in. Second quarter saw some of that, but third quarter you'll see more. The problem is that the stock is up about 11% compared to where Nifty Bank is risen about 20% in the last 1 year. So it has not kept pace with Nifty Bank. Having said that, so far all the indicators seem to be positive. So let's wait and watch what the results look like. As far as the analyst calls are concerned, BNP Paribas has the highest price target for the bank at about 1,900 rupees per share versus Bernstein, which is at about 1,550. So that variance between the two prices is quite a lot. So clearly the street is divided, as you said, Sharad.
Thank you so much for that. Street is divided. Mayuresh, how are you looking at an ICICI Bank as well? Because, it's been very interesting. You started off with the HDFC Bank that did see profit booking over the last couple of trading days. ICICI Bank has come in as well. And the target price range that you're talking about is almost, a 1,550 to a 1,900. Your views when it comes to both of these large banks and the sector as a whole?
Good afternoon, Hira. No, I think we remain constructive on the sector, but selective. Having said that, I think for ICICI Bank, our own expectations is a solid growth expected to come through, specifically on the advances part. The deposit should remain quite steady as well, and therefore I think the overall credit deposit growth should be reasonable as we speak. On the other hand, the expectations in terms of stability in NIMs should continue for the bank, and asset quality pressures should not be profound. I think it should continue at a steady pace as we head into Q3 or the second half of this fiscal year as well. Adequately provided for, and therefore the PCR is well provided for, including, I think, the treasury gains that ICICI is reporting. Specifically when it comes to the retail part of advances, well diversified. And therefore, I think our own sense is that return ratio should probably have a steady show going forward. So out of the large cap names, I think ICICI Bank is one of our top holdings when it comes to BFSI private banks, both in our domestic as well as global portfolios.
All right. Kunal, I want to get you on the PSU banks. Let's pull out the charts of Maharashtra Bank, Indian Bank, Union Bank. They are seeing a kind of a short covering from the last previous trading session as well. Your views on the PSU banking technical names, they are showing strength. I just mentioned these companies. Anything looking good on the PSU banking charts?
I think firstly on the PSU banks, the rally what we have seen, so we have seen already the trend has been up for the entire sector. We were in the first uptrend what we have started, we'll see a minor dip or correction here because of the market volatility. But overall, the larger term trend still continues to remain on the buy side. Out here, I'll look out for stocks like SBI. Still looking very good on the technical charts. Utilize dip as a buying opportunity. 950, 960 is a very strong demand zone for the stock. I'm expecting this stock to go towards the mark of 1040, 1060 on the upside in the very short term. So SBI is something which is looking strong on the technical charts from the PSU bank space.
Okay, so that's with regards to where banking counters are concerned as well. You know, apart from that, a quick view when it comes to DMart. Mayuresh, DMart will be reporting numbers over the weekend. Anything that you like over there? Because we were pegging a DMart to what was happening with the trend as well and trying to understand what the story looks like from here on.
Viral, I think let's wait for numbers. And secondly, I think in terms of expectations of a rebound, both in terms of their core businesses when it comes to apparel, FMCG or otherwise, I think you should see some element of a smart rebound happening as GST starts. The GST rationalization, the GST cuts have now started kicking in. Q3 might just have some effect in terms of offsetting of the inventory that was there pre-GST cuts. But largely, my own sense is that Q3 might be a quarter of consolidation. You might see some steady and reasonable same sales growth beginning to happen as we head into Q4. Valuation-wise, it's that old movie title, Kal Aaj Aur Kal. Kal bhi mehenga tha, aaj bhi hai, kal bhi rahega, but you have to live with it.
Yeah, that Kal Aaj Aur Kal is very interesting. I mean, you're seeing our profits which are expected to fall by what 5%. Margins are also expected to shrink this time around. So, you know, I mean, Mayuresh is kind of telling you the story as to, yes, this is going to be a quarter of consolidation and that's what the numbers are expected to look like.
But you know, the thing is that you're still seeing a stock that is trading at 90 times trailing price to book. You know, and I think we've gotten used to the fact that certain stocks will trade at those elevated valuations. But we heard a comment not too long back on this program or another one that stocks that are trading above your 50 times price to earnings valuations that disappoint even with a hair's breadth are going to get punished, and we've seen that play out again and again.
But does that happen to a DMart? Because you have your quick commerce guys who are actually coming and giving competition to DMart, and that's what we discussed this morning as well, though it was a different scenario that we were talking about, but that's where the pressure is for a DMart. Let's see where it takes. But the other focus area should be IT, which will start reporting numbers from Monday with the TCS and HCL Tech. My colleague Jasmeet is with us to tell us what are the key focus areas. Jasmeet, not the full preview, but clearly what are the key things that you should be watching out for in the next 60 seconds?
Well, Rajal, thank you for that. If you look at the overall IT sector, the key trends that will be in focus would be the overall demand that still remains sluggish. So how the demand is shaping out will be something to watch out for. Secondly, the client commentary in terms of their spending. The spending has been focused on the AI and BFSI region. So has it moved away from that and has it spread across the retail and manufacturing sector will be something in focus. When you look at the overall AI space, that also will be in focus given that the AI revenue was reported by TCS on the analyst day and HCL Tech in the previous quarter. So which all company comes forward and reports their AI revenue will be something we'll watching out clearly. And when we look at the Accenture Q3 numbers, right? So the Accenture's overall results showed a strong momentum in BFSI space. So firms which are heavy with BFSI will obviously have a good momentum going forward. When you look at the overall key numbers that will be in focus, given that HCL Tech is something that shows an outlier which having a good growth numbers about 4% in terms of the revenue growth. While look at the other factors, we look at something between 1 to 2% growth for something like a TCS, Infosys, Wipro and Tech Mahindra. And in terms of net profit, Tech Mahindra is something that's leading the overall rally where the profit is estimated to jump by 14% going forward in line with the estimate of reaching 15% margin goal by FY27. While lastly about the mid-cap space, while Coforge is expected to lead even in this particular quarter with expected top-line gain of 5%. In terms of the bottom line, most of the mid-cap firms are tanking on the back of the wage hikes, which will have an impact on margins. Secondly, on the back of the fluoros, given that holiday season in the US. So all in all, we are seeing a mixed picture as of now when it comes to the mid-cap and large caps, but the mid-caps are still leading in terms of the growth numbers compared to the large caps.
Okay, all right. And remember, thanks so much for that, Jasmeet. And remember that you've got TCS that kicks things off on Monday. It's not expected to be the best quarter. We were speaking with Sushovan this morning as well, who tracks the IT space, as you know, very closely. And he's not really anticipating any big bang results this time around. More than anything else, you're going to look for the outlook heading into the fourth quarter as well. A quick view, Mayuresh, good afternoon to you. Are you relatively sanguine on the IT space? Would you look more from the perspective of the outlook heading into the end of the year?
Afternoon, Alex. So, absolutely. I think management commentaries are going to be key for the sector as a whole. And therefore, I think the comparison between large cap IT and mid cap IT, which obviously draws some parallels in terms of how the valuation stack up is. Large cap, no two ways. I think valuations very much in favor compared to its own standard mean deviations over the last 5 years, and specifically compared to the mid cap IT pack. However, I think it's a traditionally and a seasonally weak quarter, Q3. How Q4 will shape up in terms of discretionary spending patterns is anybody's guess in lieu of what happens to tariffs and respective sectors within the US itself, whether it's BFSI, retail, manufacturing. And therefore, I think if you probably look at the construct of a lot of management commentaries in Q2, specifically mid-cap IT companies, they seem to be a lot more constructive on a whole host of parameters, whether it's constant currency, revenue growth, whether it's the pricing environment, whether it's the EBIT margin contribution, whether it's the H-1B visa scare also, which does not affect them too much as the large cap, which have also mitigated the risk to a large extent. But I think if you put all these factors put together and then stack up the valuation, which is expensive compared to large cap IT, I think you're at least seeing some element of stable earnings growth happening. Again, I think in terms of AI related initiatives, platforms, I think a few of the mid-cap IT companies have started building those as we speak, because scaling up of these operations on the base that they operate out of is far easier compared to the large cap players. And therefore, our view in terms of the sector as a whole is veering a tad bit towards mid-cap IT. Persistent emphasis, as time and again said, is something that we continue holding in our globe.
That's been the consensus view across the street as well. Kunal, any play when it comes to mid-cap or large-cap IT stocks ahead of the numbers that kickstart tomorrow on Monday and your BTST, STBT calls?
Yeah, I think definitely I'll go with your persistent. Again, the setup looks quite attractive on the technical charts. It has been consolidating and we expect this to break out on the upside. So good risk to reward ratio as well. 6,200 is a very strong support on the downside. I'm expecting the stock to go towards 6,700 on the higher end. So persistent would be a good buy even from the current levels. On the trade for Monday's trading session, I would go again for the STBT trade rather than a BTST trade, and my sell call here will be on TVS Motors. TVS Motor, after a spectacular rally, is now showing exhaustion at the higher levels. You can expect this correction to continue on the downside. 37.52 is where it is trading. One can keep a stop loss on the upside of 38.55 and look downside for a targets of 35.75, 3,500 on the downside.
That's the pick coming in from Kunal. But on to Profit exclusive. Ashok Leyland inaugurates its new electric vehicle manufacturing plant in Lucknow. And on the sideline of the event, my colleague Danish spoke to company's MD and CEO Shenu Agarwal, where they spoke about the company's expansion plans and how will this new unit aid revenue. Listen in.
So what does this new plant signify? How do you plan to deepen your EV manufacturing?
Listen, this is a very important step for us because, see, as Ashok Leyland, we truly believe that our country needs lot of electric vehicles in the future. And see, it is one thing to produce an electric vehicle in a factory which has been made for diesel, and it is altogether a different thing to create a new factory which is made for electric vehicles. There is a huge lot of difference. I mean, it's all technical, so I won't get into that. But we really believe that this factory will take us many steps forward in promoting the electric vehicle technology in India, especially related to commercial vehicle. Now, many of these things which we have done in this plant, whether it is digitization or whether this paint shop which can paint without any human touch, even a double-decker bus which is of very good height. So all these things are first in the India, and some of these things are even first in the world. So we are very hopeful that this is a big step for us to move forward to electric adoption in India.
So what is the current production capacity, and in the long run, how do you plan to increase it?
So I think we have designed it in two phases. The first phase is roughly about 2,500 units. So we started the production in October, and now from this month onwards, January onwards, we are hoping that we'll reach about 200 units a month, which is the first phase capacity. The second phase capacity is twice of this, which is 5,000 units a year. And that really depends on how we can generate the demand from this plant. So if that demand comes in soon enough, then it will not take us much time. Within 3 to 6 months, we can ramp it up to 5,000.
So just in case if you're getting more EV demand in the future, so can we expect the company to, establish more such factories in, say, in different parts of India?
Oh, yeah. I mean, see, this plant, we can go up to 5,000 within this location itself. So we have some area available, which we have already taken possession of. But yeah, I mean, like I said, EV is like, if you see in trucks, EV is like 1% of the total industry. And if you look at buses, we are just about 5%. So EV has to happen in India. It is just a matter of time. Nobody actually can say whether it will take 2 years or 5 years, but we know that it will happen. And yes, I mean, for our own growth, for the growth of the EV, we will look at further investing in many other factories.
And in order to support the EV sector in the country, we have seen that from the past many years, GST on EV has been fixed at 5%, right? So besides that, what else do you feel, or what new policy can push the adoption of EV, especially in the commercial vehicle and the truck segment in the country?
Yeah, see, I personally feel that government has done a lot already, for EV sector, whether it is the EV policy or the GST or even the PLI schemes. There are several things that the government has done. I think one thing that needs to be pushed a little bit more is that, if we can get our older vehicles, which are 10-year, 15-year, 20-year-old, and we can get them to scrapped, and incentivize some of these customers to adopt new vehicles, I mean, diesel or EV. I mean, of course, some of the people will go for diesel as well. But if we can...
Okay, all right. So that's the management of Ashok Leyland speaking at the inauguration of their new facility in Lucknow, and that is set to make electric vehicles. The stock was up quite considerably earlier on in the session. It's given up a little bit of ground, but it's still trading with gains of close to 2%. Kunal, very quickly on the charts, is there a trade here?
So yeah, definitely Ashok Leyland has been one of the stock which has been a clear-cut outperformer. Already the move has been very sharp from the lower levels. So from a short-term perspective, the support for the stock stands at around 180 zone, and on the higher end, we can expect the stock to go towards 194, 196 on the upside.
All right, so that's a view on Ashok Leyland. And by the way, the commercial vehicle players have been getting a lot of attention in the recent past on account of that up move in production and indeed sales. Let's talk about AMFI data, that is the Association of Mutual Funds in India. And guys, according to me, there are a few, like 3 or 4 key talking points. First and foremost, everybody looks at that SIP number, right? It's over 31,000 crore rupees on a gross basis, and most of that getting piled into equity mutual funds, which is always a good thing. It's at a record high. The thing is, and I was speaking to a mutual fund CEO just the other day, and they were saying that just about 35 to 40% of this is coming through in net flows. There are a lot of cancellations as well, but it's still a pretty substantial number. Number 2, it's actually a gold rush this time around, because close to 12,000 crore rupees getting piled into gold ETFs this time around, and the other ETFs getting a similar amount. And why? Because that contains silver ETFs.
So basically multi-assets are coming, it's just not equity anymore.
It's interesting that you're saying that, because in the hybrid category, and that was point number 3, the hybrid category is getting a lot of love from investors, and they're all going towards the multi-asset funds which invest in equity, fixed income and commodities, and through commodities you get gold and silver. 7,500 odd crore rupees on a net basis going into these. And the last point, the 4th point, is that in the equity category, you're going towards diversified funds, which is flexi cap funds. 10,000 crore rupees on a net basis has been invested in these schemes. So very quick view from Mayuresh Joshi on the AMCs. Look, it's not a brilliant number, 28,000 odd crore rupees into active equities, which is slightly lower than the previous month. But there are several positives as well. Do you have a positive coverage on any one of these AMCs?
So HDFC AMC, Alex, out of the lot, I think is something that we still continue holding in our global portfolios. Our sense is that the kind of flows that keep on coming through structurally over the next few months, quarters and years are going to be way higher than what we are looking at. Second, I think in terms of their business model itself, it's basically like a funnel where they've created a business model where operating costs are now very well defined. Now, any incremental income or revenue or AUM growth that keeps on happening will directly benefit the bottom line, both because of the operating efficiencies that they have built into their business model and technological innovations that that will still keep on happening to ensure that costs probably remain at reasonable levels. Once that happens, and in lieu of the TER ratios as well, even if you account that to probably take some sheen off in terms of profitability, I think that sheer volume growth will itself ensure that the numbers on the operating front and the bottom line are way, way higher over the next 4 to 5 years as we speak. So it's a structural story. You can't view these stocks every month or 2 months. Anybody having that view should continue holding. We definitely are holding them in our group.
So that's with regards to where AMCs go. Let's pull up Vodafone Idea and Indus Tower on the screens as well and see what they are doing, because that both the counters have actually, Vodafone Idea is now negative, down 2.5%. Indus Tower is holding on to some marginal gains, and this is on the back of the communication that Vodafone Idea has received from the Department of Telecom with regards to the AGR dues. Maximum 124 crores will be paid annually over the next 6 years, and 100 crores to be paid annually from March 2023 to 2035. And they will reassess the dues that will be repaid from 2036 to 2041. On the basis of this, Kunal, what are charts indicating when I talk about a Vodafone Idea and Indus Tower?
So for Indus Tower, it has already been trading in a strong uptrend on the technical charts. We have already seen a sharp rally. So from the current levels, you might have some correction or profit booking. The support for the stock is placed at around 415, 420 zone. Probably a dip towards the support would be a good buying opportunity. And again, we can see the stock going towards 435, 440 on the upside.
All right. Looking at the order wins also, there are a lot of stocks buzzing in trade on the order wins front as well. I'd like to point out RVNL that has received a 201 crore order. If you could just show that in the charts as well. But most of the stocks are down. Astra Microwave, BHEL, these are the stocks which are buzzing on the order win. But largely we are seeing a sell-off happening in these counters as well. Anything looking interesting, Mayuresh, when it comes to the order win theme, especially the railway stocks? I would like to ask your view on the RVNL front.
So Sharad, I think the expectation largely is that there should be a significant allocation as we head into the budget for the sector as a whole and for the entire ecosystem. When you're talking about railways, you're talking about safety systems, signaling systems, the track relaying systems as well, including rolling stock. And therefore, I think interesting space where allocation will be large, where orders should start coming through in a very reasonable fashion. And therefore, I think within the space itself, I think TexRail, from a rating ranking perspective at Markets with India, probably looks a tad bit more interesting. RVNL has done a fair share in terms of how it has moved, and all these tailwinds will work in favor of RVNL as well. The only hiccup for stocks like a Texmac or a Titagar, as an example, will be how do they exponentially expand their margins? Because somewhere I think the margins might get stuck up at 11.5%, 12%, which means they need to get in those operational efficiencies or otherwise, or operating leverage to kick in to have a better showing on the bottom line. Outside that, in my opinion, again, I think RVNL is a good stock to hold, but TexRail is something where I think a large mix in terms of wagon orders, rolling stock, etc., can actually play out positively in its numbers going ahead.
Okay, there are a couple of stocks in the in broader markets that are actually taking a bit of a battering, and this might just be purely a case of profit taking. Take a look at Force Motors, for example. Now, this is arguably the story of 2025, because you pull up the one-year chart for Force Motors and you'll see the kind of upward momentum that this stock has witnessed and the investors have actually enjoyed. Take a look at that, and some cooling off that we're seeing right now. Kunal, if you've held on for this amazing journey, would you take money off the table right now? Where would you keep your stop losses? How would you trail them?
I think definitely if I'm holding it from the lower levels, I would definitely book a profit over here for Force Motors. Even if somebody is holding from the current levels, and if one wants to keep a trailing stop loss on the downside, my stop loss will be 17,300 on the downside. If that is breached, then exit your longs in Force Motors.
All right, thank you very much, Mayuresh and Kunal, for your time, giving both fundamental and technical views. But coming to the markets, this has been a second day of carnage, and Nifty is below the 25,700 mark, almost 180 points downtick coming in the trade. Nifty Bank also both dragged by ICICI Bank and HDFC Bank down almost 450 points. Sustained selling coming throughout the board. And let's just pull out the Nifty index and see what's happening. Remember, IT stocks would be in focus as TCS comes out with its numbers on Monday. Let's pull out the constituents for Nifty and show you how things are moving. And there is a kind of a recovery attempt was being made in the last 30 to 40 minutes, but not very convincing. Asian Paints, ONGC and certain IT names doing well in trade. But of course, we see largely the pressure has been coming across the board. And we see the deep gashes coming in the larger names, and these of course includes your select consumption pack names. And let's just show the Nifty index, and over here ICICI Bank, that's where the downtick is coming in. Apart from that, Bajaj Auto, NTPC are the stocks where selling pressure is there. Amongst the sectors, largely at around 2 o'clock, Alex had stated that most of the sectors were in green, but a slight recovery coming in the IT and the PSU banking space, where the short covering status is there mostly in these counters, but a sea of red. But of course, the concern being the small cap, the consumer